Good evening, everyone. I am CA Govind Singh Sokhi, moderator of this VCM. We are pleased to welcome you all in the 31st VCM of the series 360-degree learning series being organized by the Continuing Professional Educational Committee of ICAI. It is my pleasure to be a moderator for this session on VCM, on audit documentation, practical approach, and risk and control matrix, a powerful tool to understand. In a short while, we'll start with this VCM. I would like to apprise you about the CPE committee. The increasing globalization, continuing development in the field of finance, and frequent changes in the world economic order has posed numerous challenges before the accounting profession worldwide. These challenges have significant implications on the growth and development of our profession and simultaneously more expectations from the profession as a whole. It is indeed the responsibility of the professional bodies to provide members with adequate facilities and opportunities to meet the challenges thrown by the dynamic environment by continuously enhancing their knowledge, skills, and professional values. With this vision, the CPE Committee of ICAI has been organizing a number of programs with the help of our programming organizing units. The program for this evening is as follows. We have 2 sessions of 1.5 hours each. And due to some prior commitments, the topics they have shuffled. So the first, we'll go with the risk and control matrix preparation as per COSO by speaker CA K. Paul Jayakar. And then practical approach on audit documentation by speaker CA Dheeraj K.S. Sharma. I would like to inform the faculty that around 1400 plus participants have joined through separate online platforms, so queries would be taken in the last 10 to 15 minutes before closing. Our eminent speakers will talk about our above mentioned 2 emerging areas of professional interest. And now I would like to introduce and invite the chairman of Gurugram branch of NIRC of ICAI, Shri CA Nitin Kataria ji, to welcome our speaker, CA K. Paul Jayakar.
Thank you, Govindji. Thanks a lot, and a very good evening to everyone. A very good evening to our guest speaker of the day, Paul Jayakar ji, and my colleague, Secretary, Gurugram branch of NIRC of ICI, Nishant Khatana ji, and Ajit ji from CP committee, and rest of the members who are present here. So, a very good evening to all the audiences also, and and a very warm welcome to the 31st VCM on 360-degree learning series organized by the CPE committee and hosted by the Gurugram branch of NIRC of ICAI. And once again, I would like to thank that on a regular basis, we are lucky enough to have done programs with the CPE committee. Last month also, we had a wonderful program on tax audit and the GST invoices. That was a very wonderful program. It was attended by more than, I think, 2,000 people live, and it was one of the good program that we have had. And in the past also, on a rotational basis, every month we had a chance to organize, host a program on the basis of CPE committee. And CPE committee is one such committee which is doing wonderful job for the profession, and they are selecting various unique topics which are not touched by the many chartered accountants, but they have a lot of scope in that, and these can be a particular practicing areas for a CAs. So once again, I thank the CP committee for giving us a chance. And now coming to the topic that today, as Govindji mentioned, that the topic is audit documentation, practical approach, and risk and control metrics, a powerful tool to understand. So it will be joined by Dheeraj Kumar Sharma ji for the second session, and he was also the immediate past chairman of Gurugram branch. So we are lucky to have him as a speaker, as a faculty in this webinar also. And what can be the internal controls? And internal financial controls can be said to be a combination of the internal finance control on the financial reporting plus the operational controls, we can say, and the fraud preventions. So the Companies Act, the Section 134 of the Companies Act, practically mentioned it as policies and procedures, and these policies and procedure contains the basic things which are being governed, like the safeguard of the assets and the prevention and detection of frauds and errors, accuracy and completeness in the accounting and records, and timely preparation of the reliable financial information. And to do all these, we must have a proper we must have a proper approach for the risk and control metrics, which we are going to learn in detail from our guest speaker from Chennai, K. Paul Jayakar, very senior chartered accountant. So I hope that we are going to have a wonderful session today also, and I wish the CP committee to keep on doing such a program, such wonderful programs for the benefit of the professionals as a whole. So without taking too much of time, I'd like to hand over back to Govindji. Thank you, Govindji. Thanks a lot.
So we'll start with the first session, sir. Respected K. Paul Jayakar, sir.
Yeah, well, I'll share the screen.
Yes, sir.
Okay, so what I will do is I'll just quickly run through the slides first, and then we will look at one or two, maybe at least one, as time permits, a real RCM. So prepared for some area. I mean, I think it's HR, but it doesn't matter, or treasury or whatever. So the agenda part is, one is on the reporting and implementation of this IFC. Then there are multiple responsibilities, but today we'll stick to what the company does, the board of directors, and what the external people, the auditors, have to do. Now, before we get into the actual IFC components, now we have to look at the growth of the governance part in India. Of course, acts have been modified and a lot of things are happening. Once the Privacy Act is also the bill, data protection becomes an act, then a lot of things change. But anyway, we'll stop with the IFC because that bill is still yet to get cleared. So it started with the CII, and then we have the various committees, clause 49, which came in 2000. And then it goes on to, again, some more committees till we come to the LODR and amended clause. Now, the question is it only for listed companies? The answer is no, it is applicable to all companies. But the corporate governance in India was more concentrated more on the listed companies. But of course, now it's extended to all of them. So till 2013 Act made this IFC mandatory. So that is where we all have to quickly look into it. And as it probably progresses, I mean, some more acts are pending to be passed. SEBI has already started business responsibility and sustainability reporting, which is also a part of the corporate governance. But anyway, that's only for the top 1,000 companies. So we'll leave it at this because our class ends with the IFC. From the company law sections, which were just mentioned, we have various people who are responsible. One is the directors. Now, directors for a listed company, they have a greater amount of responsibility. Now, unfortunately, the English which was used, they have used the words internal controls, internal financial controls, but actually, if you go through the whole act, it is actually enterprise risk management, it's ERM. It doesn't end with normal financial controls as we see in the SOX and Sarbanes-Oxley Act and so on. That's why there's always a comparison. I have skipped the comparison. We'll stay with what we have to do in India. It is a little more than just financial controls, which I'll explain as we go ahead. Now, one is they have to follow this IFC, etc. Second is they need to have proper systems. Of course, not necessarily computer systems, can be manual. Proper systems to comply with the applicable laws, which means we are moving away from just numbers to legal compliance, regulatory compliance. And this is the extension, that's this 134.5F. And then as you go further, it says, in addition to whatever has been already mentioned, in respect of adequacy of IFC with reference to financial statements. So it's not just the data reaching your financial reporting, the entire statements, whatever we are calling as the financial statements, including schedules, the risk committee's report, a lot of things go into financial statements. So as you can see, where we started with just financial controls, moved into compliances with legal and regulatory requirements, then we move into almost the enterprise resource management. So that's why this note here, of course, not in the section, but the note says it's not just the financial reporting, but also the entire enterprise risk management, which is strategic and operational aspects of the business. Of course, the other thing is it's working, not working, and so on. I know you'll raise some questions on the operational. Let me go ahead. As the questions keep coming in, we will work with them. Then we have some responsibilities on the audit committee. Now this says the audit committee will act in accordance, etc., and include evaluation of internal controls and the risk management system, which is now going one step beyond just the simple financial controls. Now, here, actually, the thing is that the interpretation can be a little less or more, depending on how important these controls are to the organization. But the point here is that risk management somehow got clubbed along with the, in fact, this is the only act in the world where the mechanism is explained. All other company acts, rest of the world, only talk about the control, but do not specify the exact implementation. But the Indian Act has taken that also into account, so we have to follow it. There's no scope for interpretation here. Scope, the extent of the control we can interpret, but the control itself cannot be interpreted. It's in black and white, and we follow it. Then the audit committee also calls for comments of the auditors about the internal control, scope of audit, etc., etc. And they also look into the internal and statutory auditors' work. Now, this is again, that means you have more than two layers. Now we have the insiders, then we have the audit committee, which is the board, or rather the governance portion. Then you have the auditor's report, which is completely external. They also said internal audit also plays a role. As we go ahead and show you the practical IFC format, it will make it easier. Then, of course, the last part is with the auditor. So he has adequate internal financial controls and it's operating the way it should be operating. If you say a control is doing something and the control was weak or control didn't exist or it didn't do what it was supposed to do, then the auditor has to qualify. So this is okay. It says the directors state the responsibility on internal controls in case of listed companies. But then going to the other rules, the board report of all companies need to have this, because some of the doubts we always have is small company, big company, listed, unlisted, private, public, etc. So given all those doubts, this is all clarified now. All companies have to go through it. Now, unlisted companies, of course, that was the rule you saw earlier. That's the same thing, just in bold print. Now, internal controls on the consolidated financial statements. Now, these are applicable to the standalone, and they're also applicable to the consolidated statements. This particularly happens associate companies, subsidiaries, controlling interests, etc. Wherever consolidation is done, the controls, what it means by mutandis is, you can have slightly different form, but the original intention should not change. So this has become again another important requirement where these consolidations take place. Holding may be private, others are public, or the other way around. This again has to be considered. Now, from the Companies Act point of view, that's why I said it goes beyond the internal controls for financial reporting. So we remove the R and just call it IFC, internal financial controls. Now you can see there are a lot of things here, which is prevention, detection of frauds and errors, safeguarding of assets. These are more traditional, like policies and procedures, which kind of put in the processes as to how things are to be safe and how we detect crime and so on. But if you see this, you will notice that there are two extra things here. One which is on the accuracy, and this is arithmetic accuracy, that's on the completeness accuracy, which is an assertion from an audit perspective. The second is it also has to make sure this its accounts are on time, the financial statements are on time, and they are reliable. Now, these two factors are slightly beyond the international definition of the IFC, which is only this part. Now, we have to also take care of these areas. Maybe you're already working with banks where they say, even other companies also, IRDA, whatever, all the regulators, data going from one system to the other should not be meddled with by human beings. That's on the accuracy and safety and so on, the reliability of the numbers. And there are a lot of places, even today, where data gets downloaded from systems. So there has to be a digital signature, a compression. Some kind of a digital accuracy has to be ensured. If it's paper documents, it's a lot more easier because we go by human signatures. But if it's digital documents, then of course these two, that dotted circles, they have to be considered. So just summarizing at this point, so there is an adequacy, that is control exists, and is it working? Controls may be there, but they may not be working because we have management override of controls, we have system failures. There are a lot of issues with these operating effectiveness. So one is the controls plus policies and procedures. So this is, of course, the Act is very clear. The policies and procedures, not the procedures, policies have to be board approved. So we have this director's responsibility for the listed company. Then, the board approved is for the unlisted also. Then we remove the policies and just stick to the controls, board report for the unlisted company and auditor's report. But if a company has, of course, everybody has policies, unless it's a very small company, they may skip the policies, but generally it's there as part of the risk management. So even if it is not a listed company, the board still has to approve the policies. So we say board approved policies. And this is the basic punishment for not complying. And see, today the class is we're just focusing on the RCM. But if anybody is reading this more deeply, particularly for companies which are using software, you also have to look at the IT Act and the Data Privacy Act, which is almost through now. We're expecting it to get passed. Those two will have to be added to whatever the company law says. So here, if you don't follow this rule, etc., there's a punishment for the organization. There's a punishment for the officers in default. Okay, that's anyway. All the various parts of the company law have punishments, but it's not so much the punishment we are looking at. It is, have we complied adequately to the board's satisfaction and the auditor's satisfaction? Then the next is, if there are external stakeholders, if I'm just extending this to your Data Privacy and the IT Act, Information Technology Act and rules, then we have to consider those. And if those companies which report to Europe and US, they have other acts like GDPR, there's a whole lot of acts we have to comply with. So we'll just leave it at the IFC, but I'll take questions on other acts also. So at the entity level, which basically means organization level, now you have to look at some controls. Earlier, we used to call these as ITGC, or mainly for the computer center, etc. But today, They call it ELC. Entity level controls have gone beyond that. You need an anti-fraud program. There has to be a whistleblowing mechanism, not just a policy, a mechanism. Internal audit, of course, is always there. Then budgeting is again another control. Ethics and code of conduct, which generally it's not very important. We don't take it very seriously here, but we need to write all this down. I mean, it's different if it's a 100% Indian company, if it's governed by other businesses or investments or external, some other kind of dealings with other countries, ethics will have to match that level. That's why I said they just brought in this word ERM, because enterprise risk management is not, the word is not used in any of these acts, IT Act, Companies Act, whatever the acts are. We have other acts also, regulatory acts like RBI and IRDA, PFRDA, the TRAI. But unfortunately, when we go through this IFC, this is where it ends up. That's why we keep on talking about the risk register. Then comes your policies and procedures. Of course, you will have to map the business processes, identify the business cycles. That's the first job an internal auditor would do. Then it goes into other things, the distribution, service income, retail, etc., etc. This can be endless. It's only a suggestive or a kind of indicative list. It's not complete. Then you can have any number of policies. Some are mandated; those have to be maintained. Others, of course, it's purely left to the company. Then the financial reporting controls. We have to take line item wise backwards to your origin, like depreciation, the disbursements, preparation of these final accounts, etc. So these will have to come from the. I mean, this whole thing comes from the correctness, accuracy of these accounts or financial statements which we are producing. So then, of course, the technology is fine because that's the last thing we'll be doing. Now, if you look at the COSOVO framework, this is Committee of Sponsoring Organizations. See, one of the things we see in most of the companies is auditors. I'm not blaming anyone. It's just that whoever is doing the work, they get some formats from the internet, make it concise, cut off certain columns, and then they start filling it up, and it goes. It's done. But as per the Companies Act, which recommends COSO, and those dealing with other acts, I told you, Sarbanes-Oxley, the Canadian COCO model, or any of those, and those also have to map also with COBIT for their IT-related systems. It's better we stick to a standard framework. Framework is just a guideline. You can use any framework. COSO is the most popular, so we end up using it. Like instead of internal auditors, we'll use it. The ISACA people will use it. The AICPA will use it. I mean, almost all the worldwide. In fact, our CA Institute in their guidance note also has referred to only the COSO framework. So we say there are some components here, like a cube. I'm not going deep into the COSO part, but in that cube, we have certain things like these names here, control environment, etc. What do they mean? So a control environment is you need to demonstrate that there is a commitment to keep things honest in the organization. So all these points actually mean that. Now, how do you demonstrate? So this is, we say, tone at the top, ethical behavior of the board, governance, mission, vision, strategic plans in place. So many things have to be demonstrated. Auditors should be satisfied. I mean, that's the first thing we need to look at. Then the risk assessment part of that COSO cube talks about identifying things which prevent objectives from from being achieved. So if you look at GRC, G, the R and the C, governance is what the company wants to achieve. That's the board of directors and the subcommittees. They do the strategy planning, mission, vision, etc. That's the governance part. Then we have the top management, whose job is to help the board, help the board of directors achieve the strategy or achieve the goals, missions, visions. There, what they do is they have to identify what will prevent this mission and vision from being achieved. So let's say if you're going, let's say I'm going from my house to the office, the risk is not reaching the office on time. It's not the delay or traffic or road diversion or flooding. That's not the risk. Risk is not achieving an objective. So the risk is not reaching the office on time. But then we have a lot of things which prevent us from achieving the objective. So we can have, I mean, these are called the threats and vulnerabilities and so on, depending on manual, computer, etc. We'll have to identify each of those. Like, as I told you, the roads are damaged, there's a diversion because a politician is going. Maybe there's a vehicle breaks down, so many reasons. Those will be the potential things which can go wrong, for which we need controls, alternate routes. Maybe you need a different vehicle or need a spare tire. So that we'll have to assess, and I'm going to the financial examples. So here, the risk is not each one of those little things. The risk is not achieving the objective. That's the top management's goal. So they put in a lot of controls, which are implemented both by the middle and the lower management. So that's why we have to say control owner, process owner, and so on. So watchman is given a control. He's got a register. He notes down all the vehicle numbers going in and out. That's a control. The risk the management saw was something else, unauthorized vehicles getting in and out, something getting stolen. So that was the risk. But the watchman probably was not told that, the risk part of it. All he was told is, look, we have this exposure or this thing which can go wrong. You just keep noting down numbers. You don't have to worry why you are noting it down. Just do the job correctly. If he has noted all the numbers correctly, his job is done. Then information and communication is when you have to move whatever we are noting, whatever we are observing, things which are, they call them outliers, which are not fitting into the normal. How do you first trace those items? That has to be mechanism for that. That's come the monitoring. And second is we have to inform the right people. There'll be an escalation matrix, and there'll be people whom we'll have to pass this on to, and so on. Let's say first 4 hours, somebody has to do it. He doesn't respond. Goes to supervisor. He doesn't respond. Goes to somebody above him. So finally, it'll end up with a senior person, a GM or someone. Then monitoring of activities is whether these things are actually happening. Controls are effective or not. Not effective, of course, your communication has to be done. And remember, in this communication, you don't have to always write reports. If it's an emergency, you can do it orally, or you can have an interim meeting or a kind of an emergency report. Those are all a part of your documentation, which we'll be seeing later. So you can communicate in various ways. Today, the most common thing is write a big report, but have an executive summary, make a PowerPoint, and speak in the PowerPoint. Now they record also. So you can make this possible. So these components, 5 components, are called the COSOVO cube components. I'm not going very deep into this, but since we have to use this framework, I just thought I'll explain these components before we see the actual RCM. Now, as I'm just repeating what I already told you, now the board of directors, they lay down all these IFCs and so on. Audit company evaluates the IFCs. Auditors, they check and they report. Now, this is a part of the director's responsibility statement. And a part, this is as a part of the statutory auditor's report. So these two, this has to be a part of the document. So this is like mandated. So there's no option. I mean, it has to be done. Then we have the listed and unlisted companies. Actually, this is okay. Then in India we have this problem, so let's go through with it. There is a listed companies. We have one thing. Unlisted, we only look at the internal financial controls or financial reporting, but unfortunately, everything boils down to finance, except maybe absolutely non-financial thing like maybe some recruitment policy or something, but maybe an appraisal. Appraisal has money, but let's say recruitment or some stores layout, something like that. And that is if it's not a mandatory layout, then only those we can leave out, everything else gets included. And if you see the responsibility you lay down for the board, whatever is on the same previous slide, I'm just repeating it. I'll share this presentation also so you can go through it. And the audit committee has a little more work than the board. And the auditors have the final responsibility because they sign off saying that, yes, we have checked the adequacy and the effectiveness of all these controls. Something goes wrong, it will go in the reverse direction. Auditors first, audit committee next, and only finally the board. Of course, somewhere in between, you'll get the KMPs also, who will be responsible. Now, the myths here are basically why people don't follow. Okay, we have good agreements, service level agreements, operating agreements. We have got CARO in place. We don't need to revisit processes again and again. Why you need to revisit is because laws change. A lot of laws change, environment laws. Of course, the labor code is postponed, but we have labor laws. Of course, we have a lot of laws in India. So this is one of the problems why processes change. Then you need to document. Sometimes, not all the time, but sometimes when you have cases with these enforcement and CBI, it's only the documents which will save the auditor. Once he is saved, then of course backwards audit committee and the others will also get saved. Then we don't have to have controls on all the risks. ERM says you have to have it. The word ERM is not used. Instead, they have gone into some complicated roundabout definitions. Then testing of controls, responsibility of the auditors. So normally they hire a consultant to prepare the RCM, fill it up, and then the auditors come and check the evidence that it's working. If the company has already filled up the evidence, then they probably will double check it, the performance or something. And they don't need a process, you need it. Then materiality is something which we need to look at carefully. Because now with the new NFRA and a lot of things being changed, if the auditor says it was not material, they need to have extreme documentation. Otherwise, it's going to be this part here. It's going to be very difficult to convince others. Then cost benefit, okay. Earlier we used to teach if the cost is high and the benefit is low, drop the control. But there is another problem called reputation risk. We have some non-compliance with certain things like pollution board or something different, gender diversity. There's a lot of problems. So now we cannot choose a control based on its benefit alone. You may have to choose it based on compliance, regulation, so many external countries, laws which may apply to us if like e-commerce portals or companies with FDI and so on. So the summary of this is cost control is no longer a method by which you choose a control. Automation, yes, of course. Oversight, you don't need an oversight body, but it's better the audit committee or some consultant does the oversight. We understand controls, there's no need for training of the people. You have to train them because the law is very clear. It says all your policies and procedures should be taught to your employees, disseminated. If there is no proof of dissemination, that's why as part of the IFC, you have to maintain a training calendar. The most difficult part is in big companies, they know the law and they have sufficient knowledgeable people inside. But in small companies, it's difficult to explain why a training calendar is part of an IFC. Training, then the policy, then explanation of the policy, explanation of the control, people, the control owner actually executing that control. The proof of that starts from the training calendar. Okay, the key drivers, it's okay. That's a governance part, as I told you, the mostly the director's role. Or they may have external pressures, that's possible. The operations is the actual details. And of course, the reporting is all the financial statements. So when you look at the lines of defense, actually now the new IA documentation, if you see, there are 5 lines of defense. I just leave it at that. We'll go with the 3 lines, the traditional stuff. So the first line of defense is all the operation operational things which take place. The second line of defense is your risk management and all those people who own the control. These are people who, these are people who own the control. These are the people of the oversight. Now, what you have to understand is in India, both of these will have to fall on the shoulders of all the CXOs, CEO, CFO, CIO, CAE also, but all these people are the KMP, senior management, whatever we call them. The third line of defense, which is the internal audit, why is it on the senior management? Okay, because not all internal auditors are from outside. They may have their own departments. Then you must do a quality assurance and improvement program audit. Already, large companies do that for their in-house internal audit departments, or they may appoint outsiders. And these internal auditors report or discuss the problems with the top management and report, of course, to the audit committee and board subcommittees. And then, of course, the board by itself, they have some duties to do. But what I would like you to concentrate on is, if you're a consultant, you probably are in the third line of defense, but you're a consultant, not an assurance professional. Consultant, you're in third line of defense, but actually you'll get involved in the second and the first line. If you're an assurance professional, auditor, internal auditor, no consulting, then it's the third line. You can find fault with these, but don't rectify anything. So just report it. Now, on the internal financial controls, basically, what is it that we have to do? On the operations, okay, we look at the efficiency and effectiveness in operations. Now, define policies, procedures for the entity level, etc. Prevention, detection of fraud. Fraud was never a part of the internal audit because we use traditional teaching is, if you see a red flag, it looks like a fraud, tell the management. That's what we teach now. But traditionally, they said just, if you have a red flag, just investigate and leave it. But now they're saying if you notice a red flag and you think it's a potential fraud, but don't inform the management, then the internal auditor is at fault. Of course, external auditor also. Then safeguarding of assets. Physical assets are a lot easier. They call it PPE for IFRS and Ind AS. But if it's going to be intellectual property, which is like brand, technology, quality, ethics, unfortunately, these are so vague. At least brand and IPR, we understand. Ethics and those kind of things are so vague that how do we safeguard the asset? You don't spoil the reputation, like a hospital or maybe a college. You don't spoil the reputation, those become very difficult. Of course, there are separate standards for working on intangible assets. Today we say, look at the process, look at a lot of things. Then on the reporting objectives, it gets a little more easier. So the accuracy and completeness of the records. This is more vague, but anyway, it has to be done. The accuracy of financial records is a lot more easier. Not financial, but any number-based record. So they have the timeliness and completeness and validity and so on. I'll just do that in detail. And okay, the responsibility of reporting. Compliance objectives. The difficult part is identifying all the applicable laws. For instance, if a factory floor or a ship, a port berth is cleaned with sulfuric acid, it should be a concentration of less than 5%. Beyond that, you must get a license. It's called the Poison Act. You have to get a license under that. And so the auditor, see, this financial auditor is fine. He knows all the GST and tax and so on. It's the internal auditor or the IFC auditor who gets into a mess because these are not just the tax laws, PF, ESI, GST, income tax, etc. This goes to a lot of other laws which have penalties, shutting down of business, and etc. etc. So the legal compliance framework today, of course, there are compliance software, but they're more like checklists with a timer. It tells you when to renew licenses, when you need them, and so on. We have a long way to go in developing artificial intelligence or machine learning based compliance framework. So it's going to take some time. At the entity level controls, which is organization based, of course, we have the business risk. Sustainable reporting is basically that. And then you have the business ethics framework, which is not just a whistleblower for the insiders, whistleblowers for your vendors, your outsiders, etc. And internal audit and financial integrity. Data should not get modified, changed. You may have problems with companies which have multiple agreements or rebates or special contracts with customers. That's why if you use an ERP, it's easier. Manually, they could have applied the wrong rate accidentally, unintentionally, or they could have applied the wrong rate intentionally. That is cheat, fraud. The legal complaints, I already told you, it's a long story. Okay, suppose you're a hospital auditor, the legal framework is completely different. You're a hotel entertainment or hospitality auditor, the acts are completely different. Main acts will remain the same, the rest of the acts. So the Romani acts we have to look at. Fraud risk management, it's been there, but now it's getting more riskier. Online, not just the online companies, but those that receive online payments, send emails, WhatsApp, this, that, so on, missing evidence, wrong evidence, tampered evidence, getting yeses and nos for authorization through your mobiles without an MDM on it, mobile device management software. So all these, of course, now have become new risks. Business and operation continuity is another part because business continuity is more on the sustainability. For instance, electric cars are going to dislocate a lot of traditional internal combustion engine manufacture, coal imports. That will get disrupted because power plants have to move away from coal. Only steel plants are allowed to still bring it in. Operations continuity is a lot of things like automation, outsourcing, buying it from a cheaper country, a lot of things which you have to look at. Succession planning, of course, the general problem is with family concerns. That's particularly if it's listed. Unlisted, okay, it's still important, but listed or if they have borrowings, then this is an important part. Then management, operational review. Now, this is why they say the management, particularly independent directors, should have various knowledge like accounts, finance knowledge, technical knowledge, whatever it is. So, unless they have those skills, they can't do a real oversight on the management. For those requirements, you can just quickly look up corporate governance with the LODR. Then process level controls, okay, the design, effectiveness, etc. So I will run through the RCM, so maybe it's getting close to the time we should get there. We have some, okay, I'll finish this off. Now, when we go to the completeness of the risk and control matrix, risk is identified, control is identified. Now they should review and update RCMs for all the financial assertions. They means, okay, whoever is in charge, consultant or the in-house staff. Generally, we say do it once a year, but where legal compliances or pressures are there, better to update it whenever those changes happen. Then control description, you have to elaborate, fraud risk has to be identified. If larger companies, you may also have a separate report called a fraud risk assessment report. It's a report which you file with the UK Stock Exchange or the US Stock Exchange, Japan, okay, wherever these people use the SOX kind of thing like JSOX, EU standards, even for the AIMS market, alternate investment market, UK, wherever it is used. Then policy procedures exist or something wrong with it. Control category specifying COSOVO control level. This has been given to us, recommended by the ICAI's guideline also. Control owner and responsibility for testing. Now you can't say there's no control owner. Even if it's automated, even if your software is doing it, somebody has to take responsibility. Then the control testing part, you'll have to use test scripts, test data, maybe run it through various scenarios, and you have to evidence this entire test you have carried out. No evidence, just think of it this way, work not documented is work not done. That's what we tell every auditing student. So if you don't document something, nobody's going to believe you that you did it. So evidencing is absolutely essential. There may be difficult stuff like ethics and so on, which need a bit more difficult evidence. Simpler ones like cash, bills, construction, stores, they are easier to evidence. After you finish, then you come to your dashboard where you count whatever went wrong. The risk universe means all the possible risks in your organization. This universe is for the organization. Control universe is all the controls you had for the various risks you identified. One risk may have more than one control, and sometimes in automation, what happens is one control may may address multiple risks. That is also possible. So, how many total you got, and how many of them are indicators or a kind of a red flag that you'll have to go a little deeper and see if a fraud is happening. The difference between a fraud and a mistake is intentional, unintentional. Intentional is fraud, unintentional is a mistake. Mistakes are treated one way, fraud is treated a different way. So that's why you need to break this up. Then comes our testing. Then now we do the same thing. On the business cycle, how many you tested, how many really worked, and how many were manual and automated, etc. Then you look at your compliance percentage, which is like very bad. Okay, less than 90, 50 to 90, greater than 90. Okay, don't worry about this color part that we leave out. The main thing is identification of all the risks, because one of the headaches we have is, I mean, in ethics, what we say is the company should identify the risks and give the risk matrix. But if you have worked with these risk matrices, the company misses out on, they know the operational risk, but they miss out on the legal compliance, how it affects the financial part, how it affects the non-financial part. They miss it out completely. So if you're an auditor, I think you need to, okay, it's strictly not permitted in law, but you can extend a helping hand and telling them you need to add all these extra risks and address them and then make sure they're all working. Okay, it's a difficult situation there. For instance, a background verification check may be very important for certain categories, not so important for certain categories. It all depends on the businesses. So you'll have to go risk. I'll answer all your questions, but you'll have to go business based. Now, the business value proposition. Okay, you plan and scope, perform the risk assessment. Actually, you need the help of the company to do this unless the knowledge of business is very good with the auditor. As mentioned in our SQC 1, it says the auditor should be knowledgeable, the staff should be knowledgeable, etc. Then we identify significant controls, then evaluate the control, document the control, etc. Evaluate the operating effectiveness and what you need to set right immediate deficiencies. And then you make sure these controls are like forever. They're very strong. Again, there's no personal comment, but every year there is a big complaint from the Economic Offences Wing, the RBI, etc., to the ICAI, saying that a lot of deficiencies were noticed in the work of auditors who have been appointed. They try our best, but any other thing is, this needs a lot of business knowledge, or what we call business acumen, or knowledge of the business. Even simple things like even purchase ready-made clothes are not the same as fabric. It's not the same as yarn. There's so many differences are there. So you have to be very careful. Nothing goes wrong. Now we'll quickly run through my examples before I get to the format. So risk and control matrix is for a payment process as an example. So payment process, advances to vendors not adjusted, very common problem, particularly in running bills. Payments in excess of invoice account, again, improper adjustment of advances and so on. Duplicate payment made to vendors, they'll ask for a duplicate invoice and somewhere down the line they pay both of them. Payment made to the wrong vendor. Now we're not saying these are frauds or mistakes. Can be anything. We'll assume it's a mistake, start with it, then see if it is a real fraud. The control activities to mitigate these things which go wrong. There's a payment process is your governance part of it. These are all the things which can go wrong. These are all the things which make sure or prevent those wrong things from happening. So you have a review of the open long pending advances. Payments are made only after reconciliation with the approved appropriate invoice. Okay, periodical review of pending invoices, etc. Anyway, what we're trying to say is these can be done by humans. I mean, there's absolutely no objection, but they may have a checklist or something. But as the volume increases, not the value, we're more worried about the volume. As the volume increases, simple automation is desirable. Desirable, okay, for the company, it's good. But for the auditor, it's better because once you check the control in the application, you don't have to bother about the transactions. Of course, make sure nobody can alter the control. But if the control is there in the software, it will work all the time. If humans are doing this, earlier we used to resort to sampling, but now again, globally they say use business analytics or data analytics. So you have to pull 100% of the data, put it through with small volume, put it through Excel, otherwise put it through Power BI or some free tool which you like, and run through the whole data, find the outliers, and then question those individual transactions. Maybe some other class you could look at the analytics. Now just takes a few examples. Now control activities are actions established by policies and procedures. The policies and procedures, we do give them as controls. Somewhere we'll say internal audit is a control, HR policy is a control. But within the HR policy or within the internal audit procedure, there will be very fine-tuned, granular control activities. Now we have to get into those. Company engages an actuary to prepare some number work. Now the issue is you hired a specialist. I mean, no doubt he's a qualified. In fact, you can give it LIC also. So you have a specialist doing it, but that's not a control. It's just a process. So the control will be somebody knowledgeable on the company side has to review the actual report, etc., look at the assumptions, see whether assumptions are really good, bad, I mean, whatever. So a lot of work goes in there. Now the question, in fact, has been raised in the institute. Insurance companies complain, auditor understands one side of the balance sheet, the one where the actual valuation and all that comes, they don't understand. So again, knowledge of business. That's why we're saying the control effectiveness, somebody has to review it. Okay, what I mean to say is appointing an actuary is not a control, it's a business process. Checking the work of the actuary is the control. Then bill revenue is summarized at the month end. Someone recording, or maybe it's automatic, whatever, they have barcodes. That's only a process. Again, somebody has to verify. So the auditor's headache now is to distinguish between a business process step and a validation, verification, authorization, a check. So the validation, verification, authorization, etc. is the one which says control is effective. He checks the data, he vets it, whatever. Process step, unless we have audited the software doing the process, and then you're satisfied. Of course, if you're audited the software, obviously data control, IDAC they call it, information technology application control, then the job is done. Again, another example, all shipments are not recorded. A general ledger is reconciled. That's a control description. Now, how this control mitigates the completeness check, we don't know. See, for instance, what is recorded will get into the ledger. What is not recorded will not get into the ledger. It's like I told you the example, vehicles coming, going out. Watchman is writing down numbers. He stepped out for a cup of coffee. He missed a few vehicles. We check all those in and out tags. If the vehicle register doesn't work, because it's not a control to find missing stuff. And then we need to have a more complex system, which means multiple documents have to be generated. It's okay. Actually, they say 2-layer control, 3-layer controls, but see, every control takes time, it has a cost, and the auditor will struggle with it. We'll try to design the system or help the company kind of re-engineer the process where they can reduce the number of steps but increase the control in the system. Now, if you have large organizations, let's say for the ethics thing, legislative controls, they publish on the website. They have classes. They have workshops and so on, and put it all in the contracts. Smaller company, they have to just put in their appointment letters. Of course, we have to explain this to all the employees, particularly the illiterate ones like contract labor. And I mean, if a top person, I mean, educated person doesn't comply with ethics, is doing it intentionally. The lower people may not know it. So when they do something wrong, they didn't want to hurt the company. They just didn't know about it. That's all. So you'll have to help them. So you'll have to make sure they understand. Then same thing again, mandatory leave policy and job rotation and so on. Small companies, you won't have enough employees to rotate them. Segregation of duties. These are things the auditor always makes a noise, but in small companies, how do we do it? I mean, there are no people. So then you may have to look at a slightly different way of looking at these controls. Because we take a checklist from somewhere and straight away try to use it, it won't work. Then the segregation of duties, etc., is what I told you. You need to have management reviews. Most of the controls will be oversight by humans, manual, and better supervision by executives. And nowadays, what they do is they outsource the supervision, which simply means, I mean, they don't come and sit in your office, but they check the documents. Like KYC is outsourced by a bank. So many things are outsourced today. Fintech companies, RegTech, InsurTech, we have the MedTech. A lot of these companies, they take business and do it electronically. We have the internal communications through various channels, big companies, of course. And you have those MIS departments and cells. How do you talk to outsiders, the social media policy, corporate communication policy, and so on, and all kinds of standards and certification. In smaller companies, it's not possible. So you need to have top management getting involved with the middle and lower management to meet people, understand difficulties. We don't have standards in reporting. And they need to also, once the issue is raised, they have to discuss and close it. All those things they have to document. They don't have a systematic way of doing this in small companies. Same thing here, ongoing evaluations are automated. I told you today we have a lot of, see, once you're on a computerized system, a lot of things are possible. But once you're not on a computerized system in smaller organizations, you'll have to do it through people, independent process. Some customer says your process is too cumbersome. I have to pay money, the accounts, and take that receipt, go to somebody else for the warehouse allotment. I have to travel. Again, I have to come back with that allotment slip to the gate guy to give it to him. Maybe we can look at simple workflow automation. If you're looking at workflow automation, look at the open source software. You have a lot of them. Process Maker is a good place to start because SharePoint needs licenses. Of course, the process level controls, these are just examples. Any standard book would help us out. For revenue, we look at sales, and the related account balances are these sales receivables, etc., inventory. This list can go on and on. So I'll just take one of these examples for the RCM exam. Okay, so this is a kind of summary of what we have discussed so far. One is we talk about the operational control, and this is becoming more and more important because they have vendors who steal your machine drawings, supply to your competitor. And I mean, many of you may be having companies which import from China. I'm not talking about chip shortage and so on. I mean, I'm talking about basic things. They're cheaper. I mean that's accepted. So we have vendor evaluation issues. A lot of these problems because not everything is a law. Sometimes there's circulars given to the customs people, given to the post offices. Circulars, basically some letter somebody typed and sent. How will we get a copy? We have to be looking at all those websites and doing a lot of work. Then financial control is the easiest because we all understand this. Key controls for operations and financial is verification of fixed assets is also becoming a big problem because some of the fixed assets will be in the outsourced vendors' locations, even machine manufacturing machines and so on. and certain things you may not be able to identify at all because they are split up. This component accounting now, so motors get replaced, pumps, bellies, belts, lots of stuff they keep moving around. Then we have, of course, the segregation of duties and so on. Now, non-key controls are, which is non-key fields. Now, but as I told you, once the Data Privacy Act is passed, there's nothing called key and non-key. If the Act says it's to be protected, you have to protect it. For instance, gender orientation, male or female. Basically, I mean, you don't care if the data gets stolen, but the IT Act and the rules, 2008 rules says you have to protect it. Then you have to protect it. That's also, I mean, you could ask a question, what's he going to do with it? But the Act says don't give it out, so you can't give it out. This may need a further study because the Act is still, IT Act is ready and passed, but the data privacy is yet to be passed. GDPR, EU directives, all the other acts are in place. So, whatever, FCPA, Foreign Corrupt Practices Act, USA, Anti-Bribery Act, UK, they're all in place. Only India we're having struggling with these laws. But let's move ahead. I mean, at least we hope March 22 should go smoothly, and 1st April 22 we'll look at these new laws, including a labor code also, new labor code. Then fraud controls. Of course, India and cybercrime, we keep finding absolutely innovative methods of cheating. Auditors should at least keep reading some of these fraud cases to understand. So here, if it's only a small company unlisted, ICFR is fine. If it's bigger, or if that whatever 10 crore capital, etc., threshold you have crossed, then both operational and financial becomes your IFC. You add the operational, the key, and all this fraud, it becomes ERM. So the word ERM is not used, but unfortunately it is. I mean, that's the whole job. Now, before we go to the spreadsheet, we have something called accounting assertions. One is on accuracy. The data recorded, etc., is done accurately, say appropriately, but it should be accurate unless there are estimates, warranties, provisions, etc. Completeness is nothing has been left out. Now, for instance, in these assets, recording, liabilities, equity interest, which also includes share-based payments, and I mean, various things are there. Completeness is a very important part. By having incomplete transactions, there may be a risk of money laundering or, various risks are there. The validity is they should have been recorded, have occurred, and they pertain to the entity, that is basically pass-through items, and should be for the organization, not for the directors and other individuals in the organization. Okay, that part is the more legal part. The cutoff date is what we call the timing, so they have been recorded in the correct accounting period. So that's called timing. I think our institute will call this timing. It has to be for the period, accrued or outstanding or whatever. You should not be taking later periods or earlier period stuff into account. For those who are doing this ERP stuff, they call it closing period, accounting period. It's called closing procedures, account closing procedures as a policy to be written. Things have to be done a little better rather than leaving it to the employees to decide what is right, what is wrong. Then valuation and allocation, of course, this is equity included in the financial statements at appropriate amounts, and resulting valuation. See, what happens is there's a big difference between IFRS and rest of our accounting standards, where US GAAP in India, where IFRS will use the market value and we'll use historic value. It's okay for assets which have got a financial bill, you got an invoice. But things which you have excess paid for a merger or whatever, you can't value your own goodwill, but you can take excess paid as goodwill. But unfortunately, the excess paid as goodwill is only one possible intangible asset. There are other things like brand, technology, ethics, process. They need valuation. Of course, there are methods. There are 5 methods you could use. There are trained valuers who can help. Then presentation and disclosure, of course, is whether they're classified on right head. Simple example, if you put a contingent liability as a provision, your profits will come down. If you take a provision and put it as contingent liability or profits will go up. Depends what you want to do. It's increase or decrease your profits. So these are the accounting assertions: accuracy, completeness, validity, timing for our Indian purposes, valuation and allocation, and presentation and disclosure. Okay, this is just a quick look that we have entity level controls for the organization, process level for a particular process or software. Preventive controls, they prevent something even before it has gone wrong. Detective allows it to go wrong, then detects it. They can be manual, they can be automated. I will have to fill this in the RCM. This is okay, the who, why, and all that. I'll show you in the RCM. We'll come back to the slideshow. I'll keep it open, so it's not a problem. So I'll just open the. I'll have to share the screen. Just. Okay, what you see now is called a sample RCM. Actually, it's only an outline. I'll show you a filled one also. So I'll just increase the size a little more. We'll scroll, no problem. So if you see the columns here, now these columns are as per the COSOVO definition. So you'll have your company name, etc. Or of course, we have to say count how many key controls. This is a fill up last, of course. Then your process risk and so on. So it's a template. I'll go to the real one next after this. So the control references we have, that's a control number, C1, C2, whatever. Design effectiveness, yes or no. Now, when you come to this one, the COSA assertions, which assertion are you working with? Rights and obligations? Is it like accuracy, validity, and so on? And what's the risk? What's the control activity? A short description, of course, columns will be bigger than a template. The name of the IT application, just a sample, it says HR, so that's only an example. Then we have the type of control. It can be compliance, it can be anything else also. It can be a financial accuracy, validity, and so on. What's the level? You have high key, which is like critical. Key, it's important. Non-key, not very important, but as I told you, don't use the cost benefit analysis. If it's a compliance requirement, we have to have it. I mean, that's it. For instance, labor law says you need attendance records. I mean, you have to have it. In fact, the failure of work from home in India is because our acts don't have proper, not been modified, they don't have proper provisions for work from home. The labor fellow says you need attendance. Companies say, I don't care, as my job gets done, I pay my employees. But that's a non-compliance. Very difficult, but anyway, we'll go ahead. From which date the control is effective? When does this work? Monthly, but actually some of them will work all the time, continuously. How is the control? Is it automated or whatever? If you are doing a sample kind of thing, then fill in the testing size, because samples have to be explained very clearly to the audit committee, because they would like to know the method of sampling, attributes, stop and go, whatever method you used, chi-square, or whatever method you have used, and how you arrive at the sample stratified, etc. Best is you put the plugin for sample generator in Excel and generate the samples. That's far more accurate than doing this 1 in 10 and randomly selecting and so on. It's easier on the audit committee also. Then control type, we had preventive, I didn't show corrective, but we have preventive, we have detective, and so on. Then estimated volume of this control occurrences. Of course, we had to push through all the data. That's okay. Then information and communication, like is it a data backup? What kind of control is it? And then we'll have the control owner, who owns the control, who takes care of it, and so on. The supervisor, of course, is the oversight person. Whether it's a fraud control scenario has been considered, the detailed description, test procedures, etc. A type of test is re-performance is when you repeat that whole test again. So that's the whole test again. And then you have the document request. From whom did you get the data for testing? That's important because company may say we didn't give it to you. So we have to note the person who retains those documents. What's the population you worked with? But once you go to data analytics, the sample size and the population will be the same. Then source from which you got the population, and whatever your expected testing, others more for your filling, and whether this was a key control earlier or not. Control level changes, or why did they change from high key to key, or key to non-key, or other way around also, key to high key. Then detailed change reason, a financial reporting objective. The only thing you will find when you read a COSO document or AACPA document is they have a standard called AS5, which we don't have, the equivalent, where if all the controls are given in that standard, or rather complied as per that standard, then these columns need not be filled. So that's okay. India, we don't have the AS5, so we have to fill. But those are working with both the US and the Indian accounts. You may want to just look at that AS5 from the US gap. Now we have the last of these examples. So we need a completely filled okay, this is for the, okay, so I'll just expand it, it's small. Okay, now for instance here, you can see that okay, these are the abbreviations, the CE, whatever this completeness, RAs, assessment, ICs, internal control, etc. You can see that they come from different people. These principles here are the COSO principles. This is a very detailed thing done for some client, but you don't have to go so deep for a small company. This is just the ultimate template. And you have to again specify type of whether it's key, non-key, etc. These are the keys. Then severity of the risk, the likelihood. These are all the principles. COSO has 17 principles which you would have to lay out. And this side will have all those likelihoods and address based and so on. And maybe I'm not pushing this too much, but I just wanted to see the whole COSO thing. Once you fill all this up, this is not fill up, these are facts. I mean, every RCM you prepare will have all this. Those are all the various fields which you saw. Now what we'll do is we'll go to the actual RCM itself. At least let's take one or two entries before we look at the questions. Now these are the numbers you have given. I'll just make it a little bigger. These are the numbers you have given. I'm sorry. Okay. Now we got the control reference, and then it's on budgets. The sub-process is annual operating plan. Every company will have a plan for the year that your board will approve, strategy plan. Process description, revenue and expenditure. You move to the control environment. Okay, move to the control, the parameter, COSO parameter is control environment. There are 5 of those parameters: control environment, risk monitoring, communication, etc. Then the COSO principle is 2, which says ensure that board exercises oversight on these various things. So that's principle 2. Then the risk is they're not following the annual operating plan, both for revenue, expenditure, IT, strategy, etc., etc. Then you come to the severity of the risk. So this will be high if the annual operating plans have to be submitted to banks, regulators, a lot of people. So if they don't do it and they don't adhere, I will be explaining a lot of non-compliances. So that's why the risk is high. And then you come to the inherent risk. Is it like inherent or fraud risk? It's an inherent risk. It's not fraud unless somebody is sabotaging the company. The likelihood is risk is probable, likely to occur. That's if there's no monitoring action. That's why in later points you'll see how does the board exercise oversight over these plans and adherences and so on. So here we have the financial line item. There's no line item. Then you have this completeness, accuracy. That cutoff was the timing I told you, and all those points we discussed. We'll have to fill all this up. It's not been filled. Then we'll come to the control description. The annual operating plan is prepared as follows. The revenue they take from the inputs collected from various customers, agents, other customers. Expenditure based on power consumption, etc., etc. So all this is how the control functions. So anybody reading this will know, okay, they're not just blindly putting some numbers. They have done some arithmetic and they can justify whatever they have done. Then what's the control type? It's preventive. And then, of course, it's manual because it's a human-based thing. Frequency is once a year. Then you have your key control over here. And then, of course, the rest of it, you can see that's system-generated reports. They're using spreadsheets because it's management-oriented. Inquiry comes from the GM Finance. Population definition, no population, so the entire thing is fixed. And this you can see as we move ahead, there's no sample size, is 1 because that's the entire document. Then we got whoever does it, document keeper, test performed, etc. So you can see all these fields. Some are filled, some are empty, but this is a complete template. I showed you the same format. Unless I from same format, it has been filled up. So that's a fully filled RCM. We have to spend some time. Of course, it's a short session. You can spend some time going through the various COSO requirements. So what I'll do is I'll stop here. I'll take your questions.
Yes, sir. Thank you. Thank you very much, sir, for your sharing your expert knowledge.
You're welcome. Thank you. Thank you again.
So there are many queries regarding Section 404, certification for US-based companies in India.
That is SOX requirement. They can ask over. Let them go ahead.
Yes, sir. So they want to know more about it, sir.
Okay. So see, the 404 is like exactly like our LODR or Clause 49 listing agreement. Only thing is, see, the SOX is the oversight body is called the PCAOB, Public Company Oversight Accounting Oversight Board. Okay, anyway, that's the expansion. SEC is the regulator, like we have SEBI. Now, what the 404 wants is a COSO-based. Actually, what I showed you now is COSO-based RCM. You have to prepare the same format, but the points they do there is they don't define like the Indian Companies Act, where they said what is an IFC, what is an IFCFR, almost ERM they're defined, but they have not defined anything. So the company is free to disclose what they feel is a risk. Mostly from software companies and BPOs, the SOX will only relate to people risk, procedure risks, customer risks, billing risks, exchange risks, and foreign exchange risks, currency exchange risks, those kind of risks. So a template for 404 is easily available. Since the Act has not specified the risks, company can disclose whatever they want. Only thing, you shouldn't get into trouble and you should not make false disclosures. That's on the 404, but there's another one called 302, and there's an 800 or something. Those three sections will have to go together for the risks.
Okay. I hope it clarifies the query. And sir, is there any difference in case of non-US based companies in India?
No, there's no problem. See, the Indian-based companies are under the Companies Act.
Yes, sir.
If they have taken money from an overseas investor like US or Europe somewhere, or if they're listed the shares in UK, US, Singapore, Japan, any of those companies, or they have a joint venture where they have to submit this consolidated accounts as associate or subsidiary, then of course the SOX, not just the SOX, you've got EU directives 4, 7, 8. I have for data protection, GDPR, Anti-Bribery Act, UK, FCPA in the US. All those, a lot of compliances are required. The Indian government has now allowed, in the new act, Indian companies can open branches abroad. They can open companies abroad, like foreign companies could open in India. Of course, you read in the scams, Videocon, etc. But there are a lot of companies which open abroad. Then also you have to comply because they have this effective place of management that's called POEM, that actually is defined more under transfer pricing. Place of effective management, you'll have reporting currency, functional currency. In those cases, IFRS is more important than the Ind AS component.
Okay, sir. There's another query, sir. They want to ask how much percentage of time of internal audit project usually goes in filing the RCM?
A lot of time goes because an entire internal audit gets over once you fill in the RCM risks, controls, and the evidence. That's the internal audit. From there, you can generate the whatever report directly. So actually, all your time has to go into the RCMs. All means almost all the except minus the reporting time, report writing time, and data. I mean the planning and preparation. The actual execution is the RCM. That's why knowledge of business is critical because companies, see if it's a small company, bad company, they don't know the risks. It's a big giant company, they hide the risks. In both cases, it's a problem.
Okay, sir. There's a query, sir. Is there a software in India for RCM documentation?
Actually, we are using Excel sheets only at this point in time. Software, people are trying to develop it, but it's still not working properly unless we are able to map these risks one against the other, and the machine learning or the artificial intelligence is showing you a discrepancy that what the stores guy told you and what the costing chap told you and what the finance guy told you is not telling. Right now, you still have to use human intelligence. Not yet. Maybe it will come. I'm not too sure.
Okay, sir. There are few queries relating to the section 404 again, sir. Yes, there are many queries regarding the same section, sir.
Right.
Yes, sir. Section 404. Can you, sir, repeat it once again, sir, for better?
Okay. So actually, this 404
Yes,
came after those frauds which took place in the US. And this, the Sarbanes-Oxley came after that. I skipped a history slide. I didn't put too much history. It starts with the King's thing, the Cadbury Committee, and South Africa actually did a lot of work and so on. So for us in India, the trouble started with the Satyam problem. So once the Satyam problem got into a mess, the company law people, I mean, they just copied the Sarbanes-Oxley, straight away did a few modifications, dumped it on us as the New Companies Act. So actually, it's very difficult to comment whether it's a fraud or not a fraud. See, for instance, we have Enron, WorldCom. I'll give you some of these cases. Volkswagen, which is European emission fraud. I'll just give you an example of WorldCom. See, what WorldCom did was they kept buying bandwidth from other companies, but they didn't find enough customers for the bandwidth. Money got lost, it got locked up. Then started the problem to cover up this useless assets which they had bought, not useless, but assets they could not immediately encash or earn revenue. They started fudging the accounts. So is it a risk? Is it a business risk? I wouldn't say yes. It is no, because any good communication company would like to acquire more and more bandwidth. But hiding the fact from the shareholders, that's bad. I mean, so those who are reading 404, identification of the risk is very, very critical. So the one risk, let's say, buying the bandwidth. The other risk is hiding that money was invested in assets which are not immediately earning revenue. Is the second risk. Now, the first risk is, I mean, okay, that's a business point of view. Second risk is a violation of ethics and the more an ethical violation. So, whereas in India, it says everything is the same, you prepare it like an ERM. We are not making any distinction between ethics and non-ethics and financial and non-financial. Operational, that's all, that's the word used. You have to get it done. But in the US, they trust people more. I mean, basically, it's more of trust. Anybody preparing SOX for US, you'll have to clearly distinguish between an operational risk and a financial risk, because for them, the biggest worst thing you can do is fraud, tell a lie, hide your income. Making a mistake in business is not a crime. In India, making a mistake in business is a crime. Immediately, you have to put it on your website within 2 hours. If you are listed, a flood has hit your factory, it's not your fault, but you must immediately tell the shareholders within 2 hours on the website. I mean, it's not your fault at all, but they still think shareholders should know about it.
Okay, sir. I hope it clarifies the section. And
So I think somebody is asking these questions. I think they are working with these companies.
yes,
I would suggest reading Corporate Governance from LODR and Sarbanes-Oxley. You need to have a comparative study, because India is one thing, they are one thing, and if you're stuck with a collaborated company, it's very difficult.
I think it's the next question is regarding this only, sir. Is the ICFR of the Companies Act equivalent of the SOX of the US?
Actually, unfortunately, it's more than that. That is the problem. So, because in India, the auditors have not taken it seriously. Large listed companies, the first 1,000, etc. Now it's business, they call it business responsibility and sustainability reporting. Now they are finding this RCMs getting more and more tougher. It's not just like what you're doing, but what will happen to you in the future, kind of. So are you taking care of your, not just the workers and vendors and employees, whatever, the customers, are you taking care of the community? You would have seen JSW is putting in 55,000 crores for rehabilitation and resettlement for their mining project. That money is just lost. I mean, you're just helping people live a better life. Now, is that a financial RCM point? Yes, it is.
So there are no.
But I understand the questions. I think the questions come from those with the larger organizations, mostly
Yes,
BPOs or
Yes,
software companies, those kind of companies. SOX is a much easier standard. Our IFC is a much more, it's not a standard, it's a very difficult requirement, because the Act has spelled out directors' problems, responsibility, auditors' responsibility, audit company's responsibility, like we'll nail you down, we'll punish you, we'll put fines on you. So I guess our RCMs are worse. So they had to be much more complex.
Okay, sir.
And those KMPs also have punishment in our Act. I mean, what will he do? I mean, he just signs company secretary or some poor guys, he's in trouble.
Okay, sir.
So is that okay? I think it's we're close to winding up. So
Yes, sir. So that's it, sir. Those were basically the queries. And before I invite the Secretary of Gurugram branch, CA Nishant Kumarji, I would take this opportunity, and it's a privilege and a pleasure to tell a few of the many achievements of CA Paul Jacker. CA Paul Jacker is a fellow member of the Institute of Chartered Accountants of India since 1981. He has completed PhD from University of Madras in 2005 in Internet Security. He has also completed diploma in Insurance and Risk Management from ICAI. He is certified in Risk and Information System Control, ISACA. He is a committee member of publication on NAS of NIRC of ICAI for the year 21-22. He has experience in digital forensic audits and analytics, business procedure re-engineering, data for business, implementation of information systems, ERP for various Indian companies and MNCs. And now I invite the Secretary of Gurugram branch of NIRC of ICAI, CA Nishant Kumarji, for formal vote of thanks.
Thank you. Thank you, Govindji, for providing us this opportunity, and the CP committee for giving the opportunity to Gurugram branch for organizing this program. First of all, I would like to thank today's technical speaker, Paul Jayakarji. He has explained each and every aspects of risk control metrics and the internal financial control requirements in a very detailed and the practical aspects. So it is very easy to discuss such things in the theoretical aspects, but how to implement these things practically is very difficult. Because I have dealt something, a few items, so implementing such requirements in the practical way is very difficult, and also has explained each and every requirement in such a practical and easy way that it will be very helpful for all the members, and I hope that all the members will get the benefit from his vast experience and this very useful session with the practical led by the practical examples. Paul sir, we on behalf of Gurugram branch and CP committee, we thank you for sparing your valuable time and for sharing your knowledge with the members, and I hope that they will be benefited from this. And it is now I give back the dice to the Govindji. Govindji, please.
Thank you very much, sir, and thank you for the opportunity. Thank you, sir. Thank you.
Govindji, you are on mute.
Okay, this ends the first session of 31st VCM, and I request Secretary CA Nishant Kumarji to introduce our next speaker.
Thank you, Govindji. Our next technical speaker is CA Dheeraj Sharma ji. So he's a very close friend because he's a colleague in our committee. So he's one of the member of our managing committee. He's the past chairman of the Gurugram branch, and he led the branch very effectively during the pandemic era. So he did very wonderful programs in that era, and he is a chartered accountant by profession and a social reformer. He has completed his post-graduation from the University of Rajasthan. And one very interesting thing I got to know about him today itself, though I know him from so many years. He has done the certification in the different areas from the IIT Kharagpur, IIM Bangalore, and the IIT Bombay. So he did the financial accounting and analysis from IIM Bangalore, certification in emotional intelligence from IIT Kharagpur, and certification in energy resource, economic and environment from IIT Bombay. So it is a very good profile. He is a regular speaker, not only on the ICAI platform, but on the universities and the other platforms, on the educational platforms as well. He has taken 500 plus sessions, and he is a very enthusiastic speaker. It is always good to hear from him, from his interactions, and included with the verses of the Gita. So that is always good to hear. So we hope that we all will be learning a lot of things from enthusiastic session of Dheeraj. Now you can start. So I hope that it's time for the technical session. So thank you. Govindji, you can.
Yes, sir. I would like to add many other stars, sir. I would like to introduce him. And CA Dheeraj K. Sharma is a chartered accountant by profession and a social reformer by passion. He is an immediate past chairman of Gurugram branch, the largest branch of NIRC of ICAI. He has completed post-graduation in accountancy and business statistics from University of Rajasthan. He has certification in financial accounting and analysis from IIM Bangalore, certification in emotional intelligence from IIT Kharagpur, and certification in energy resources, economics, and environment from IIT Bombay. He has certifications in business responsibility and sustainability reporting from ICAI. He has conducted more than 500 sessions, which includes workshops, conferences, training programs, etc., and has presented more than 20 research papers in national and international conferences. He has more than 100 certificates, medals, and awards from prestigious institutions. And now I would request CA Dheeraj K. Sharma ji to please start the session. Thank you, sir.
Thank you. Thanks a lot, Govindji, for these lovely words, and my warm regards to Chairman of Gurugram branch, my very dear friend of mine, my committee colleague, CA Nitin Kataria ji, Secretary of the Gurugram branch, CA Nithan Khatana ji, very dear friend of mine, like my elder brother and my committee colleague. And as mentioned by Nishan ji, that in the last year when I was Chairman of Gurugram branch, wonderful work was done by Gurugram branch. I owe this credit to all the committee members. Of course, two are on the screen, Nitin Kataria ji, Nishant Khatana ji, and Vice Chairman of the branch, Mohit Bhai, I think you will also join us very soon. So all these are collective effort of everyone. So warm regards to you. In the absentia of chairperson and vice chairman of CP committee of ICAI, and my co-speaker, very learned person, very much experienced professional, and the person who don't not only have experience in terms of years, but also in terms of explanation of the technical topic as well, Paul Jaikar sir, and the teams members of CP committee, Ajit Tiwari ji, secretary, and all the team members who are putting their best possible efforts, especially as mentioned by Govindji that this is the 31st VCM by CP committee. So it's really beautiful to see that the time when already code of conduct is going on in relation to ICAI elections, still the CP committee is organizing all their programs in a full-fledged flow. So salute to all the efforts of the entire team of CP committee. Warm greetings to all the participants, and before I move ahead, I would like to convey my thanks to Paul Jaikar sir for one support as well. He is very much humble. Today I was supposed to start the session at 5 p.m. but because of some health issues of my son, so I requested him through CP committee to exchange the time slots, and he accepted this request. So thanks to you, Paul sir, for that as well.
My pleasure. Thank you.
And sir, I would like to inform the faculty that more than 1,400 participants have joined through separate online platform. So queries will be taken in the last 10 to 15 minutes.
Yeah, okay, Govind, I will try to sum up my session approximately 15 minutes before the scheduled time so that we can take the questions. And if you are asking for the questions, so I also request all the participants, please feel free to ask the questions, because I have Paul sir in my backup. So in case I feel that I am not able to answer any of your question, I will also learn a lot from the appropriate answer to be given by Paul sir here. As it is rightly mentioned somewhere in Sanskrit, ki apurva ko api koshvaya vidyate to bharati gayato vriddhi mayati chay mayati sanchayat. This is the beauty of treasure of knowledge, that as much as we share with others, we discuss, it gets increased. So obviously this is a great opportunity for us as well to learn. Now let me start with my presentation, as the topic assigned to me is audit documentation. Discussing about audit documentation in a practical approach. So first question which comes in our mind, whether we people are doing the audit documentation in the proper manner, yes or no? Ask this question to yourself. I'm not asking this question to you, and I'm not requesting you to answer in the chat box or somewhere else, but ask this question to you, chartered accountants who are involved in assurance functions. I'm not using the term of state audit or tax audit. I'm using the term of the chartered accountants who are involved in the assurance function, whether you are documenting your entire procedure, all the evidences and everything, every report as per the requirements of auditing standard 230 and all other auditing standards. Ask this question to yourself, because many a times, even when I conduct session on overview of auditing standard as well, and I put this question before the participants, whether you are following all the standards on auditing in the true spirit. Many of them says, Mr. Dheeraj, I am practicing in a very small city. My clients are really very much small. MSME clients are there. In fact, most of my clients are micro-sized clients. So am I supposed to follow all the auditing standards? Am I supposed to comply with the compliance, very typical compliance or the complex compliance of auditing standards? My answer is yes. The compliance of auditing standard is mandatory for every chartered accountant in practice. Though the quantum of compliance of a particular standard, it may be different considering the nature and size of the business of the client. But of course, these are applicable to us. This is all about the background of auditing standards, because before we move ahead towards particular compliance of revised SA 230 about audit documentation, just get the background of all these things, and then thereafter we will discuss in the practical approach with the help of some examples that how we can compile the data, what is exactly supposed from our side, what we need to do, and how to overcome the situation of non-compliance. Basically, all the auditing standards, not only SA 230, all the auditing standards are mandatory to be followed by every chartered accountant practice as per the guideline of the Council of ICAI. So first thing, forget about it that my client is of micro size, so I should not bother about documentation of audit work papers. I have very small client, or I am working in a very small city. If you have such kind of mindset, kindly come out of this mindset. SAs are mandatory for you as well. When we talk about section 143 subsection 9 as well as section 143 subsection 10 of Companies Act 9 and 10 as well, you will find that this is the compliance, this is the expected from every auditor to follow the compliance of auditing standards. As per Code of Ethics of ICAI, though I speak on Code of Ethics as well, and I discuss about the practical problems of the members, and many times member request them, they received a love letter from ICAI disciplinary committee, I mean to say notice, because of a minor non-compliance of auditing standard. My dear friend, nothing is minor, nothing is major. It is supposed from you that yes, you have to comply all the auditing standards which are applicable on your client, on your particular engagement. You have to ensure the compliance of those. So in case, if any non-compliance in relation to SA 230 or any other SA is done by a chartered accountant in practice, it will be considered as professional misconduct and be ready to receive the love letter from disciplinary committee of ICAI. If we summarize the entire audit, when you read SA 200 and SA 220 about quality control, so SA 200 and SA 220, if you want to summarize the entire auditing procedure, because before moving ahead towards the importance of documentation, first we have to understand what exactly being an auditor we people are doing in an assurance engagement. So the entire audit procedure has been summarized in this slide. You would be agree that the first of all, obtaining the reasonable assurance. So how you can ensure that the reasonable assurance has been obtained? Obviously, you will verify some documents. You will cross-examine some information. You will take the understanding of the business and the controls and internal environment of the entity as well. And for what? That whether the financial statements as a whole are free from material misstatement. That means it can be that there can be any kind of misstatement because of fraud or because of error. Irrespective of that, the ultimate target is that the financial statements as a whole are free from material misstatement, and based on that particular reasonable assurance, you express your opinion that the financial statements have been prepared in respect of applicable financial reporting framework. That means your accounting standards or your Ind AS, whatsoever the case may be, as per the applicable FRF, your reporting standards, AS, Ind AS, or IFRS, maybe in case of your foreign entity and you are reporting for that. So particularly, this is the entire procedure of auditor, and based on that, the auditor submit his audit report. So in this entire procedure, if I ask you, being an auditor, you have not performed your duties diligently, and you will say, no, I have given my best. Then I will ask you, justify that you have given your best, and in fact, it was your assignment was handled in a very diligent manner. So how you will defend yourself? You will say, I have obtained the reasonable assurance about everything. In my samples, everything was correct. I could not go for 100% testing. I agree. But based on your sample, you can say that yes, I have done everything in a very diligent manner, and of course, based on my samples, I can conclude that financial statements have been prepared as per the accounting standards, and these are free from any kind of material misstatement. Now, my next question to you: how you can say that your sampling procedure was perfect? You will say, I have followed the compliance of SA 530. That's good, audit sampling, SA 530 you have followed. But my next question to you was, how you will justify that you have followed SA 530? Now, if there is something which has been documented by yourself in a proper manner, you would submit your audit file, permanent file, as well as your current file before me, and you will say, Mr. Dheeraj, you can check everything. Whatever I have done is documented in this. Whatever I have tested is documented in this file. Whatever I have reported is also documented in this file. And whatever I have communicated to the management, that is also documented in this file. Only that particular audit file can defend your work. So, my dear friends, sir was giving an example of Satyam. Yes, of course. If the proper documentation have been done by the auditor at that time, the fraud can be identified in a due course, or auditor can provide safeguard to himself. So, in the entire procedure, if we talk about what is the responsibility of auditor about the entire auditing procedure, and you will mention in a very light manner, Ms. Dheeraj, as far as our understanding is concerned. Now read SA 210 as well, agreeing on the terms of audit engagement. Then that means the responsibility of auditor is to create a audit plan, right? Then to execute, then conducting the audit. For what? Collecting the applicable and appropriate and sufficient audit evidences. Okay, that means collecting these evidences and to make a determination or the opinion. That means forming your opinion, providing your report that the financial statements are free from any material misstatement. Now, please highlight on 3 words. First thing, to create a audit plan. Second thing, execute that plan. And third thing, collecting the sufficient and appropriate audit evidences. So I would ask you, or let's suppose I am a government authority, I am the person from Enforcement Directorate, and I have the doubt that being auditor, he was also part of any kind of fraud which happened in a company with the help of the management. So, and you are defending yourself. So first of all, I will say, Mr. XYZ whatsoever, or let us take an example of Govindji. So Govindji is an auditor, and I will ask, Mr. Govind, do you know about your responsibility? And he says, yes, Mr. Dheeraj, this is my responsibility being an auditor, of course. So have you fulfilled your responsibility in a true manner? Yes, Mr. Dheeraj, I have done. So Mr. Govind, have you created the audit plan? Yes, I have created. Show me. Then you have to submit the proper documents that yes, minutes of your meetings, documents of your audit plan, details of your team members who are involved in that particular assurance engagement, and the entire thing, everything which you have documented there, all about audit plan, all about sampling, all about materiality, all about risk assessment, all about RCM as well, and everything what you have discussed and documented during your audit plan, you will submit to me. Then I will ask you, okay, then your second responsibility was all about executing that. Have you executed in the proper manner? Yes, Mr. Dheeraj, I have done. Okay, Mr. Govind, show me. Then he is supposed to submit me the documents about the testings, about some confirmations, that how he got the confidence, the reasonable assurance about that the particular statement or particular financial statements or document is true and correct. Then thereafter I will ask you how you have collected the documents and whether you have collected all the sufficient evidences. First, he will show me the sampling, the entire procedure followed for sampling in compliance of SF 530. Then thereafter, as per SF 500 and SF 501, for audit evidences, he will submit whatsoever evidences he has acquired during the audit procedure and how he has ensured that based on those evidences, he can conclude or he can comment on the financial statements. So these three questions, when I will ask him, and if he will submit all these things to me, he will be free from that case. But everything he can submit only when it is documented as per SA 230. These are the responsibilities of the auditor. Okay, before that, let me ask you one thing. Hindu people, they usually do the last rituals of their family members in the form of Daha Sanskar. Let us take an example of Christian or the Islamic person. How they do the last rituals? The graveyard, that is the particular, they have their kabristans, and then they have the graves of their the family members who died. So there is a kabristan, there is a particular place where more than 1,000 graveyards were there. And one fine morning, in the memory of your late family member, late friend, late relative, you want to pay tribute in his memory on the occasion of his birth anniversary or on the occasion of his death anniversary. So how you can identify among all these more than 1,000 graveyards that this particular graveyard is belonging to my grandfather, and I will visit there and I will pay my tribute with some flowers or some any other more like a bouquet or anything. How you will identify? So when you visit there, you will find that at every graveyard, in most of the graveyards, not every, in most of the graveyards, the name of the died person and the date is mentioned over there. If this documentation was not made by some person at that particular place, it will be very much difficult to find out the graveyard of your late friend or your family member as well. So this is the example of documentation. I ask you, in the national emblem of India is taken from, you will say, from Sarnath Stham. Okay, and in that particular national emblem, there is a circle as well that is called chakra, and this is taken in the national flag of India as well, in the tricolor as well. There are three colors layers, and then in between there is the blue circle that is called Ashok Chakra. So how you have given the name of this chakra to Ashok Chakra? It can be something else as well. It can be the tire of my cycle as well. How you can say this is Ashok Chakra? Then you will say, boss, our emblem is taken from the Sarnath Stup. It was built by Ashok Maurya, and in his memory, this particular chakra that is kept on our national flag, and it is known as Ashok Chakra. Okay. So boss, how you can say that the particular Sarnath Stham, that statue, was built by Ashok, and or particularly built in the tenure of Ashoka? Then you will show me some sculptures, something written on the stones. You will show me these things. In temple or in Dharamshala or any some public place, when people make their donations, what you find, there is a stone and it is mentioned in the memory of this, his or her son, these people, they have donated or they built this room or this door, or they donated this water cooler. Even after hundreds of the years, if somebody will be visiting over there, and he will be able to identify that this particular room was built by these people in the memory of their late father, Mr. XYZ. So how you can identify this? Just merely because something has been documented, something has been mentioned over there. That is the importance of the documentation for us as well. This is the responsibility of auditor in terms of the entire auditing procedure. First of all, as we discussed, to obtain the reasonable assurance, right, about the financial statements are free from any kind of material misstatement. That is, material misstatement is important to understand here. Then maintain an attitude towards the professional skepticism. Yes, obviously this is the responsibility of an auditor. Then he has to document and list out that what kind of circumstances where he can identify some material misstatement. what he has done to identify the material misstatement. He has to document these things. Then thereafter to consider whether such misstatement is an indication of the fraud. How he can say, boss, yes, I have noted that there was misstatement in the purchase procedure. There were control gaps in the purchase procedure, but I thought it is just an error. It is not leading towards the fraud. Verbally, you cannot justify it. You have to show some documents that yes, when I found that there are some misstatements in the purchase procedure, it can be an error or it can be due to fraud. So I have done the analytical testing, I have done the control testing, or I have done the substantive testing. I have obtained some additional evidences, and then based on that, I can say that it was not due to fraud. It was just the human error or the clerical error. So you have to document about that as well. Then whatever you have communicated to the management or the people who are charged with the governance, those charged with the governance, TCWZ, or any other regulatory authority as well, whenever required, you must have the documentation of those communications as well. In case you are not able to complete your engagement, so in that case, you will withdraw your assignment, you will resign. So while resigning as well, you can correlate with the notice of MCA when auditor is resigning in the midterm and MCA is sending the notice that why you have resigned, and auditor is mentioning the reason due to I am being occupied, I would like to resign from this engagement. No, my dear friend, you are preoccupied or you are excessively occupied. This is not a valid reason nowadays. Nowadays, this is not a valid reason. You have to mention that why you are withdrawing yourself. What are the reasons? And mentioning all these reasons, you have to resign, submit your resignation to the management. When we talk about the engagement performance, again, your documentation will prove it, because when we talk about SA 220, about the quality of the audit, then this is the responsibility of an auditor, the engagement partner, especially the EP. He has to take the responsibility of direction, supervision, and the performance. He has to take the responsibility of review of all the work procedure. He has to take the responsibility that whenever he feels that there is some deviation in the opinion of auditor and the management, he has to consult. He can consult with the management, he can consult with the other experts as well. So this is his responsibility. Then engagement quality control review is also to be done by them. EQCR. Have you heard about this term? Obviously, many of you have heard this term, and if I'm not wrong, many of you, even not being part of any of the big four, you people are following this procedure in your office, EQCR procedure. Let us take an hypothetical example. I and Govindji are partners. I am doing audit of Nishant sir's company, and every document has been provided by himself, and I have done the testing, and now I am going to sign the audit report. But before signing the audit report, I will submit my audit file, the audit report, my documentation to Govind sir for an overview. He will just do the quality review, and he may ask me a number of questions based on his doubts. And thereafter, I will decide, yes, there is no doubt is left. I have the answer of every doubt. Yes, I can sign the audit report. Even you are two partners in a firm. If you say, my firm is very small firm, we are only 4 partners, we are only 5 partners. My dear friend, if you are only 2 partners in the firm, still you can implement the procedure of EQCR. Engagement Quality Control Review. It is really going to help you. And if you read carefully the Code of Ethics of ICAI, then also you will find that the EQCR is really going to help you at that time as well. And then moving ahead, in case of the difference of opinion, how the auditor is proceeding ahead, it should be documented in the proper manner. Though this particular document is really very much old, approximately more than a decade. But yes, this was the glimpse of a report published by SEC, the Security Exchange Commission in USA. Just like in India, some enforcement actions have been taken against the auditors. Similarly, in US as well, some enforcement actions have been taken against the auditors. So the summary of those cases has been listed out over here. In 80% cases, you will note that the enforcement action was taken against the auditor just because of non-compliance towards the gathering the sufficient audit evidences. Boss, I am saying, yes, I have tested everything. I have checked everything. The enforcement agency will ask me, Mr. Dheeraj, show me the proof. Show me the proof that you have tested everything in a proper manner. You have the sufficient reasons to believe that documents are free from any kind of fraud or error. Then I have to submit my audit file, my documents. So in 80% cases where the enforcement action was taken against the auditor, it was all about lack in the gathering of sufficient audit evidences. That means non-compliance of SA 500, 501 and documentation under SA 230. So that's why this is really very much important for us. Around hundreds of the year ago, Mr. Robert mentioned very rightly, even this thing has been mentioned by Paul sir as well in his deliberation, that if nothing has been documented, that means you have not done anything. Whatever you have done will be accepted only when you have documented it in the proper manner. So the skills of an accountant can always be ascertained by an inspection of his working papers. If your work papers has been prepared in the proper manner, they have been documented in the proper and self-explanatory manner, then it can be said, yes, he is a good chartered accountant, he is a good auditor. And this is a very common saying about we people, about chartered accountants, that chartered accountants are known for their accountability. So our accountability can be justified with the help of our documents, our work papers, our audit file, what we have done. Now moving ahead about SA 230, that has been revised about audit documentation. 2-3 important things. Let me ask you a few questions and I will answer simultaneously because I know this is not possible to reply for yourself in the chat box on the simultaneous basis. First thing, what do you mean by audit documentation? Because whenever we discuss about SA 230 and all these things, blah, 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 one question comes in our mind, Mr. Dheeraj, tell me what is exactly defined as audit documentation? Everything you have done during your auditing, since the engagement letter, then including your planning activities, then your testing activities, then all your performances, then your audit evidence activities, and then your reporting activities. That means everything with whatsoever you have done during the audit engagement. And when you record this procedure and everything, every work paper, this is called audit documentation. Nothing else. Recording of your procedure, your work papers, and your communications, including your report. That is the audit documentation. So where you report, where you document? In the audit file. Yes. In how many days audit file is to be completed? And for how long an audit file is to be kept? Sir, audit file is to be completed within 60 days from the completion of the audit engagement, and this is to be kept for 7 years. It can be kept in electronic mode or in the physical mode. Audit file means the particular electronic or the physical storage where you have, your audit documentation has been stored. That is your audit file. There can be two types of audit files. One can be the permanent audit file, another one can be the current audit file. We will discuss it later. But basically, audit file is nothing but the storage location. It can be physical form, in the physical form, or it can be in the electronic form. The storage location of your audit documents, that is known as audit file. Then the next thing which comes in our mind, why we have to do the documentation, what the relevance of documentation, how to do the audit documentation, what are the modes of audit documentation? Sir, the meaning as we already mentioned, recording of audit procedures performed, whatever the procedures you have performed, audit planning, defining the materiality, selection of the samples, then their testing, everything what you have performed during your audit procedure, recording of that, Then recording of relevant audit evidences obtained. Yes, I have mentioned, I have tested 10 vouchers, voucher number this. So I have documented my procedure, but I didn't obtain the copy of these vouchers, either in scan mode or in the printed mode. Then the relevant audit evidence obtained by myself have not been documented and my audit file is incomplete. So that means whatsoever you have obtained as sufficient audit evidence, that should also be documented, and then your conclusion where you reached. So to reach at some conclusion, what you have done, you have performed your audit activities, then thereafter you have discussed. So such discussion is also to be mentioned. You have communicated the management and you have received some management representation letters. Yes, that is also to be documented. Then thereafter you have provided your report, that is also to be documented. Now talking about the purpose, why audit documentation is to be done, why we people are really very much worried about audit documentation. First of all, it assists in the planning and performance of audit. How it assists? How you can say that it is assisting? Though I am an auditor and I myself is creating my audit plan and I am documenting my audit plan, then how my documentation is assisting myself, helping myself in audit planning? Sir, I'm not talking about that particular year. I'm talking about the next year. In my company, let's suppose there are 200 people. In the current year, Govindji has done audit of a particular client. In the next year, Govindji left my company, left my firm. And I requested Nishant sir, please do the audit of this particular company. And Nishant sir went to do the audit of that company. He will prepare his audit plan once again. He will take the understanding of the environment of the business of the entity once again. He will assess the risk once again. Obviously, he has to do all these things once again. But if the audit file prepared by Govindji is consisting of all the documents relating to audit planning, performance materiality, sampling, the understanding of the business and environment of the entity, external and internal factors, then it will help Nishant sir. He will first go through with that audit file of the previous year. He will take the understanding and then he will take the interview of the concerned person of the client. Otherwise, if he will start to ask everything to the client from zero, the client will get irritated. He will say in the last year also we told him about the history of our company. We have the 80 years old history and every year your team member is coming here and asking me about the history of our company. This is not possible for me. But that particular file will help him. Then while performing your auditing, the direction, supervision and review of work, as a 220 quality responsibility of audit partner in terms of engagement performance. Remember, because you people read standards on auditing in a regular mode, I expect this thing. Though I am not a chartered accountant in practice, still I read auditing standard. But many of the people who are chartered accountant in practice, they must be reading auditing standard. Yes, this is coming from as a 220. So for the purpose of direction, for the purpose of supervision, what you have done? Sir, in your audit file, there is a procedure of sign off, right? The tracking of sign off. First, my article has done. He will give his initials on the documents. If my audit file is prepared in the electronic mode, then he will mark his sign off. Then thereafter reviewed, my manager or my engagement partner will mark his sign off. So direction and supervision, that is also to be documented. To fix the accountability. Sir, let me give you an example of my real life. In the year 2010, when I was in one of the big four, and we people were doing the audit of one of the very big telecom company, and the team of 70 to 80 people, we people were deputed on that client. The team of 70 to 80 team members. Among this team, there were 2 partners, I think 2 or 3 directors, approximate 10 managers, then deputy managers, assistant managers, audit seniors, article clerks, and it was the composition of from article to partner level team members, and 70 to 80 people were there. Now, I have not documented anything. I do not have documented audit plan. How we can ensure that everything has been tested? Every segment has been touched upon by my team members? How we can ensure? Let's suppose I am testing FAR. Then another team member has also started to test FAR with the help of other team member, because in that company, even in the fixed asset function, in the finance team to operate and to take care of fixed assets accounting, there were more than 10 people. So somebody has started to do the testing of fixed assets relating to towers. Somebody has started to do the testing of fixed assets relating to their admin. Somebody has started to do about testing of spectrum related FAs. So all these things, but nobody is able to compile the things if we do not have a documented audit plan. And once we have done our audit and we have said, yes, sir, everything has been done, and partner is supposed to sign the balance sheet, and then thereafter, it was found that there was some material misstatement in terms of consumables which are kept for the repair and maintenance of towers. So partner will ask, he will shout, who has done the testing of consumables? Among these 80 team members, nobody is raising his hand. So how you can ensure the accountability of the team members? Sir, this document says, if you have obtained the photocopies or you have obtained the electronic document, you have prepared your audit file, and every document is signed off. Initial has been marked by the team member who has performed that audit, the testing of that particular area, that particular field, then it can be easily identified. Yes, Mr. Dheeraj, you have done the testing of consumables. Come here and tell me what you have tested. Where is your sampling procedure? Where you have documented the samples obtained by yourself? So to fix the accountability, documentation is again very much important for us. Then recording for the future reference, obviously. The quality control review and inspections. Yes, sir. For the QCR as well, for the future inspections as well. Let me give you an example of peer review, right? It happens for chartered CA firms. In the peer review, what the peer reviewer do? What he does? He just check your audit file. He just check that proper procedure you have been followed. Everything has been documented in your audit file. Compliance of essays has been followed by yourself. Then conducting the external inspections as well. Like ED, for God's sake, nobody should receive any kind of love letter from ED or any love letter from disciplinary committee of ICAI. But still, if you get any kind of such notice, then your audit file is going to provide you the safeguard. Now talking about the nature of audit documentation, we have to ensure two things. First thing, this is sufficient and appropriate. Everything which I have documented. If I say that I have tested 100 samples, but in my audit file, copy of only 5 samples is there, and there are total 1 lakh vouchers. Out of 1 lakh vouchers, I have gone for testing of 100 vouchers. Among these 100 as well, I have documented only for 5. And once somebody has asked me, boss, show me the other 95 samples which you have tested, and I'm not able to show. I have mentioned that I have gone through with the entire purchase procedure with the help of scope of work. I have exercised my due diligence to ensure that risk control matrix is prepared in the proper manner, and all the assurance has been ensured in the proper manner. Show me the document. So first of all, whatsoever evidence you have obtained and documented in your audit file should be sufficient in quantum and appropriate in quality. Let me give an example of sufficient but not appropriate. Okay, let me give you an example. You are doing audit of the mall, and that particular mall, you have seen that on special occasions, the owners are offering some discounts, and the discount was offered like on the occasion of Christmas, on the occasion of New Year, then thereafter occasion of Holi, then International Women's Day, and so and so. for International Men's Day, for Labor Day, 1st May as well. Otherwise, men will feel offended. So, on various different occasions, the different kind of discount off has been offered by the management. So, what you have done, you ask the management, okay, sir, please provide me some samples for every season about the discounted sale on Christmas, on Holi, on Diwali, on Navratri, on everything. Noted, you have documented 10 samples of every season. You have checked that yes, of course, the discount was given as per the policy and it was properly accounted for. The effect on this discount, the effect of GST on this discount is also been accounted for properly. And everything has been documented properly. 10 samples for everything. And your file is now ready. Okay. So you can say, yes, your documents are sufficient. But I am the person from enforcement agency and I will ask you one question. Mr. Dheeraj, have you tested that the discount was offered on the occasion of 25th of December, whether the sale made on 24th of December and 26th of December was at the fixed price or there was any discount? Though the discount was made on 25th December, all the accounting for discounted sale, for taxation treatment for that discounted sale has been accounted only for the sale made as on 25th of December, whether you tested for 24th or 26th December. I said, no, I obtained all the samples from 25th of December. Boss, obviously this is sufficient, but not appropriate. In fact, you have to obtain some more samples for 24th and 26th December as well. Even any odd day, when there is no discounted sale was offered by the management, just pick some sample and check that whether the product was sold on the MRP or any kind of management quota discount or any kind of such a manipulation was done by the staff members. Because it is not auditor's duty is not only to test the frauds made by the management. It is his responsibility to ensure that financial statements are free from material misstatement. So he has to test about the integrity and the proper working done by the staff members as well. Second thing which talks about the nature of audit documentation, that is the evidence that the audit was planned and performed in accordance with SAs. Yes, that means you have complied with all the applicable standards on auditing. This thing should be documented. If this thing has not been documented, okay, one question to every one of you. You people are doing tax audit, right? This is the season because this year date has been extended. You are doing tax audit. How many of you have obtained the engagement letter for the tax audit? In the permanent file of your client to whom you are providing the services for tax audit, the engagement letter, the reappointment letter is put in their permanent file. Tell me this thing. Ask this question to yourself. And if you are doing tax audit, don't give me this excuse, my client is very much small. That is the proprietorship concern. My dear friend, you are doing tax audit. You are performing an assurance engagement. Don't give an excuse that is the proprietorship or HUF or society or trust or partnership firm. That is not a corporate entity. My client do not provide any kind of engagement letter. As per SA 210, all the terms between auditor and the auditee has to be pre-discussed and to be ensured that the preconditions are existing and to be documented in a proper document which is known as engagement letter. So if you are doing tax audit without obtaining engagement letter, that means you have already purchased the ticket for lucky draw disciplinary committee of ICAI. Anytime shakalaka boom boom, you can get the love letter from ICAI DC. From today onwards, please follow this practice. As a 210 says. So I have given this example here because audit documentation means documentation in relation to all the essays which are applicable on you and your client. Got it? When we talk about the form, context, and extent of the audit documentation, basically understand only one thing, that audit documentation should be done in such a manner where you can defend yourself, you can justify that the proper planning of auditing and proper performing of auditing function was in a fair manner, independent manner, and in a diligent manner. Second thing, the nature, time, and extent of audit procedures that should be properly documented. NT means nature, time, and extent of audit procedures that should be documented properly. When you performed any audit procedure, like you have sent the balance confirmation letter to the debtors, now you can say, boss, I have complied with the compliance of SA. That's good. You have done the compliance of SA 505 and you have sent the letter for the external confirmation. But when you have received the external confirmation from some of the vendors, you found that there is a significant variation in the balance confirmed by the vendor and balance shown in the books of accounts of the client. You just obtained that confirmation documented in your file. That means it's incomplete, inappropriate, and insufficient. You have to do you have to obtain the reconciliation. You have to get the comfort. You have to obtain the reasonable assurance that because of these reasons, the variation is there, and there is no need to reinstate the vendor or reinstate your sale. There is no need to reinstate the vendor or the sale. You have to obtain such particular reconciliation over there. So whatsoever results are coming out of your auditing procedure performed by yourself, the audit evidences relating to those should be obtained and properly documented. Some significant matters which are arising during your audit procedure. One example I have given you about the significant variation from the vendor's balance confirmation. Some other reason may be there, can be related to the fraud, can be related to the very big non-compliance, which can affect the going concern of the entity as well, as per say 570. So when you find such any kind of significant matters during your audit procedure, please document that how you have proceeded about these particular matters, how you have assessed the risk related to those, and how you are addressed, how you have reached to your conclusion. That particular entire procedure about those significant matters have to be documented properly with the help of management representation letter obtained under SA 580. The ownership of audit documentation, yes, obviously this is the property of auditor. This is your sole property. That means you are building your own property, your own audit document papers. In the first year, you have created some samples. Somebody asked a question to Paul sir, that is there any software regarding RCM? Risk control metrics, yes, Govindji. Though still most of the companies, many of the companies are preparing their RCM and tracking in the Excel mode itself. But think about it, the company has prepared its RCM, developed RCM in the Excel for the first year. It was really very much difficult for the company. But in the next year, while performing their testing, while testing the ITGC, the general controls relating to IT and all these things, while ensuring the assurance relating to every kind of procedure, whether it will be too much difficult for that client? Obviously, no. He has to put in only 20 to 25% efforts as compared to the initial year in which such RCM has been prepared. So if you are preparing such documents, such a particular knowledge bank, it is surely your property and it is going to help your team members to take the understanding not only for that particular client, but also such work papers, such design templates that will help them to perform audit of other clients as well. Though there are some factors which affect your audit documentation, in a very summarizing manner, I must say, basically the nature and size and complexity of the business, organization structure, transactions of the client, all these things are affecting the proper procedure of audit documentation, even the quality of audit documentation as well. At one of my clients, merely obtaining the confirmation from the vendor can suffice. But on my another client, I still need to do some physical verification. Let's suppose my stock is lying with the third party at the job worker's location. The quantum is approximately 2% of the total inventory as on the cutoff date. So I will not perform any kind of physical verification over there. I will ask that obtain the confirmation from your job worker that this much quantity of this particular product or raw material whatsoever is lying at my location on 31st of the March in relation to job work chala number this or agreement number this. And I will verify it from their confirmation only. If this is matching, the quantity mentioned in the confirmation, quantity mentioned in our books of accounts, if these are matching, then okay. But in case my 80% of material is lying with the job worker, in that case, can I rely on that particular confirmation provided by the job worker? Obviously, my answer will be no. So there is no standard answer that confirmation obtained from job worker will be a sufficient and appropriate audit evidence for the purpose of verification of quantity of inventory lying at job worker's location. Answer can be yes, answer can be no. Considering nature, size, and complexity of the business and transaction of your entity. If we talk about audit planning, many more things which are supposed to be done by auditor, he has to document that the audit planning was properly organized, his audit performance was properly organized, and it was really a managed audit. So it can be shown through audit documentation itself. Then identifying the potential problems on the timely basis. Yes, what kind of problems I can face? Sir, there are some of my clients, some of my customers of my client, they are PSUs. And this is the general trend that obtaining the confirmation from PSU is a little bit difficult, and it takes approximately 30 days, or you have to send 3 or 4 reminder letters, then only you get the confirmation from this PSU. Sir, this is hypothetical example. Any person from PSU should not get offended. This is an hypothetical example only. So this is the general trend over there, right? You know about this trend, and you know that you have only 45 days to complete your audit. Thereafter, you have to sign the audit report because the company is having their AGM. Date has already been fixed, or the last date to hold the AGM has already been fixed, obviously. So what you have to do, first identify that potential problem and initial day on the even you, what we have done. I remember my experience when I was in practice. I really enjoy my practice with my previous firm. So what we people supposed to do? Let's suppose we are doing audit. We are planning to do the auditing, the audit of a particular client in the month of August or September. But even in the month of June or July, we sent 1 or 2 our staff members to there for 2 days. What the people used to do there, obtaining their trial balance, just getting the overview, reading out the previous year's audit file, and sending the balance confirmation letters to the vendors and debtors and other parties. Sending the letters to the legal service providers, to the other experts, internal auditor and solicitor and these people, that is there any sufficient misstatement you found during your during performing your duties? Kindly do let us know. We are being the state auditor of this company, would like to get knowledge about that. They obtain the internal audit report and start to do the study of that internal audit report. Even though we are going to start the proper auditing in the month of September, but in the month of May, June or July in advance, because we know if in the month of September we are sending a balance confirmation letter to a PSU, it is really very much difficult to obtain the letter before 30th of the September. So do this thing in advance. Yes. If with the help of your previous year's audit file, audit documentation, you will get to know about this, and it will really help you. It assists in the selection of engagement team members as well. In kind of my audit planning, whatsoever I have documented for the last year, I am going through about this. Though the manager who was assigned on the this engagement in the last year, he left the firm, and now I have to depute some other manager. So first, after taking the understanding of the business and the risk and the complexity of the accounts of that particular client, based on my previous year's audit documentation, even in the planning part, I can decide, obviously, yes, has some risk of fraud is there. So the person who is having the proper knowledge about asset 240 or the person he has the qualification of FAFD, he should be sent over there. Or there is the new ERP has been implemented. So the person who has done DISA, he has the interest in the system audit, he should be sent over there. So these things help us to even identify the suitable engagement team members as well. Then appropriate attention to important areas, it can be done based on that, the coordination of the work and facilitating the direction and supervision of the engagement team, already covered. Talking about the audit documentation, how it is important in the computerized environment. Sir, firstly, we have to understand what are the risks in the computerized environment. Because we rely on the programs that can process inaccurate data, or also that they may be affected with the inaccurate processing as well. So what to do? Sir, you have to document that you have done the testing of the system as well for the sample basis. Now, suppose you would like to do the calculation of depreciation. You want to get to know that the depreciation has been calculated by the system is correct or not. So you will select 2 or 3 FAs and you will calculate their depreciation in the Excel. And you will come out over there. Yes, the WDV should be this much. Now you will run the depreciation run in the system as well, and you will come out with the result from the system. Compare the work done by yourself in the Excel sheet and the report generated by the system. If there is no difference, then you can rely. So sir, testing is to be done, especially in terms of the valuation. Let me give you some examples. In terms of inventory, in terms of depreciation, in terms of forex management, especially in these 3-4 areas, such simultaneous testing is to be done because the risk is higher in these areas. The risk is all about, you have fixed the audit entries, right? In the last year, even after freezing the system entries, then some entries has been made in the Excel at the time of audit. It happens usually, and now the balance sheet has been prepared in the Excel and printout has been taken and signed and everything has been done. In the next year, this is your duty to ensure that whether these entries which have been mentioned in the Excel and these were called as the audit entries, these have been passed in your system as well, and they have the effect on opening balance of the current year as well. It can only be done with the help of the audit documentation done for the previous year. Because in your audit file, you have the particular file of audit entries. Your team member will sit there and check, yes, this audit entry has been put in the system, this has been done, this has been done, okay, fine. Sometimes any kind of unwanted changes can also be done. Unauthorized changes can also be done in the system. Virus attack can be there. Many more such issues can be raised in relation to computerized environment. So that is the different matter. But of course, this is your duty to document that how you have obtained the sufficient and appropriate audit evidence to reach at reasonable assurance level. This is your responsibility. Talking about audit evidence, since the starting of the session, we were talking about audit evidence, SAAE, sufficient and appropriate audit evidence. What do you mean by audit evidence? Sir, when you read SF 500, Auditing Standard 500, you can easily understand audit evidence. This is nothing but the information used by the auditor to arrive at the conclusion, and based on that, auditor's opinion has been provided. This is the audit evidence. The information obtained by the auditor in arriving at the conclusion on which auditor's opinion is based on. The evidence need to be sufficient and appropriate. Though the example I have already been given to you, so I am skipping this slide. Obtaining the audit evidence is, yes, obviously. While preparing our audit file, while ensuring the documentation, proper documentation, we have to ensure that proper audit evidences have been obtained and documented. It can be based on my own observation about understanding of the business. It can be external confirmation as a 505. It can be recalculation. An example has been given to you about the depreciation. In the Excel, you have recalculated. You can do this for the forex entry as well. You can do this for the inventory as well. Re-performance as well. Sometimes client says, yes, depreciation run has been performed. No, please re-perform in your system. Cash count has been done. No, I will do the cash count once again. Inspection of the documents, it can be done. Inquiry, like interviews and this thing. Analytical procedure as well. So last year, the business was affected because of COVID. So while doing audit of an entity, in that particular entity, you found that the labor cost, the contractual labor cost increased in the month of April, May, June, and July as compared to rest of the year, 8 months. Obviously, this question should be coming in your mind. It should hit your mind. Because in that particular period, even the production was stopped. So as comparison to per unit labor cost, why my labor cost is high? And even though these people are contractual labor, so no payment of wages was made in that particular period. And you will ask the question. Then they will say, boss, yes, of course, the production was stopped in this particular plant. But we have to retain our laborers. We have to ensure that the people are still working with us. So we have provided them some additional facilities. Second thing, we have obtained some approval from the government to start up some necessity goods production in the month of May, June, July. So because of that, in these 4 months on an average, our labor cost was high because the cost was paid not only for their working hours, but also we have provided them some food, some other facilities, medicines, even COVID treatment as well. Also, we have faced that, like for an example, there are 100 workers working over there, but 20 found unwell. So in the doubt of COVID, we allowed them to take rest and we have offered them the paid leaves and we invited other 20 contractual laborers. So in that case, particularly, we paid for 120 laborers. Then I thought, yes, my dear friend. Otherwise, I was thinking that in that particular lockdown period, how the labor cost can be increased? It can be happen. Your doubt can be in relation to rent. Your doubt can be in relation to cash statement as well, monthly fund flow management as well. So these analytical procedures should be performed and documented. If I talk about audit evidence which is to be documented and the characteristics of such evidences, first of all, in case these are external evidences, these are more liable than the internal evidence. Let me give you an example. You ask your client, boss, what is your bank balance as on 31st of the March? And your client said, dear sir, we do not have net banking facility. So we are not able to show you on our screen. But yes, we do not have any kind of bank reconciliation items as on 31st March. So you can rely that whatsoever the bank balance is coming in our books of accounts is our actual bank balance. You say, no, boss, I need one more document. Then your finance manager says, oh, no problem, sir. I will give the representation letter from the director about the bank balance. Okay. No, sir. This is an internal document. And for this particular evidence purpose, this is not sufficient. An external evidence from the balance confirmation from bank, it is to be obtained. It is to be received. Even if you have such kind of facility, your team member should visit the banker. Bank confirmation should not be obtained through the letters. If you are your client is having the bank branch near to the plant location, your team member should visit the bank with the client and ask the bank manager, sir, please show the bank balance of this particular client having current account number this, and kindly confirm the balance on this document. So specifically, in most of the cases, external evidences are more sufficient, more liable. Another example, being an auditor, you do the compliance of AS 15, right? The compliance of AS 15. The retirement benefit, employee benefit, PF and all these kind of payments are made to the team members, staff members, and the provision is taken for all these things. If such calculation is provided by the management, obviously you will raise a number of questions. But for this purpose, for AS15 compliance purpose, 99% of chartered accountants, what they do, they rely on the document provided by the actuary. Your client submit you a document provided by the actuary, was actuarial evaluation has been obtained. Now you say, okay, in the disclosure part of AS15, everything is to be obtained from that actuarial report. That is the external evidence. If we talk about internal evidence, sometimes reliability increases only when the controls are effective. Paul sir was talking about controls. He was talking about the risk as well. And he was talking about the interlinking between control and risk. If risk is high, higher controls are to be implemented over there. So if you feel that controls are higher and sufficient, then the reliability of internal evidence is increased. Then if evidence is obtained directly, that is much more reliable, and many more things. You can read out this. I will share the PPT with the CPE committee as well, and Gurugram branch is my own home branch. I am even part of the committee as well. So you can obtain from there also. Now moving ahead on the next slide, because we have some more things which are to be discussed. These are all about the auditor's duties when any kind of evidence, any kind of thing has been used as the proper documentation for the audit document file. So this is the duty of auditor to ensure that competence, capability, objectivity of that particular expert when he is relying on the document provided by another expert, like actuarial valuation, like internal auditor's report, like other auditor's report, as per SA 260 report provided by a joint auditor. So in those cases, he has to evaluate these factors in a very quick manner. I am just summarizing this. Then obtaining an understanding of the other experts' works. First of all, you must have obtained the understanding of that as well. People say, yes, actuarial valuation has been obtained. Boss, obviously, you can rely on the valuation report provided by the actuary, but you have to do the testing of the data provided to the actuary, whether this is correct or not. If the data provided to the actuary is not correct, obviously the result will be incorrect. Then evaluate the appropriateness of that expert's work. Moving ahead, specific documentation. Skipping this slide, we will covering. This is the time when we people are facing that many of the entities are struggling with their going concern assumption. Many entities which are shutting down their operations, they are badly affected with COVID-19, badly affected with lockdown, badly affected with such a healthcare crisis. So this is the time when, being an auditor, in your audit documentation file, please take the extra care about standard on auditing 570, SA 570. That is all about the going concern assumptions. Yes, sir. There are some factors. That is the financial condition. It reflects, it can give you some smell that going concern is being affected or not. Some operating conditions as well. And there may be some other factors in a very quick manner, because we have last 20 minutes. So I would try to sum up. Then thereafter we will be taking the questions. But yes, going concern is that particular area, especially in the current scenario, documentation about asset 570, anything which smells about the negativity of the going concern of your entity, then please document this thing in your audit file. If something is required to do the impairment, then you can do the compliance of AS28 as well. But still, for the purpose of SA 570, you have to document what we have tested about going concern assumptions. Another thing, that is specific consideration you have to take care while preparing your audit document, audit file. That is all about some specific events which are occurring between the date of financial statements and date of auditor's report. The date of financial statement is 31st March 2021, right? But you are signing your audit report in June 21. As we all are aware that in the month of April, COVID was once again at its boom, and the second was at its boom, at its peak, and it was really a biggest crisis, not only in the field of healthcare, but also in the morale of the people as well. It was biggest crisis that particular phase was. People lost their people. Sir, your client is having inventory as on 31st March, and that is the perishable good, having their shelf life of 7 days only. And in the month of April, there were some restrictions And because of that, such perishable good was completely destroyed, nil. So even realizable value of these goods, this inventory was completely zero. And you are signing your audit report in the month of June. The sign of second wave of COVID was still present in the month of March. So considering AS4, considering the event occurring after the balance sheet date, considering a compliance of SA also, this is your responsibility to take care of the provision about this inventory, at how much value you will provide the valuation of this inventory. So many kind of a situation can be there. It can be the case of fire, but in case of fire, the event was not expected, not predicted as on 31st March. So your treatment can be different. But specifically, the special events occurring between the date of financial statement and the date of auditor's report, these should be properly documented in your audit file. How you have taken the understanding of these documents, how the sufficient and appropriate audit evidences has been obtained, how you have inquired from the management, and how you have documented in your file. Some very specific thing is all about audit engagement as well. Yes, my dear friends, people do not document about audit engagement while accepting the engagement. Yes, though I have already given you an example of engagement letter, but still, what should be the ideal procedure to accept any audit engagement? First of all, whenever you receive an offer to accept an audit engagement, evaluate the integrity of the management. You will say me, Dheeraj, how it is going to affect our engagement? Yes, it is going to affect, my dear friend. You are an auditor. You are going to be appointed as an auditor of XYZ Limited, and XYZ Limited is the king of real estate sector in the Gurugram. So in Gurugram, and you are really very much happy. Oh yes, I am going to be appointed as auditor of XYZ Limited. Yes, very good point in my portfolio, and fees will be 50 lakh rupees. 50 lakh rupees will be fees. Now you are very much happy. But before accepting the audit engagement, on the very next day, in the morning, you are reading your newspaper, and it was found that the directors of XYZ Limited, they were booked by ED in the matter of money laundering, in the matter of bogus transactions. Now, will you accept the audit engagement? Yes or no? Maybe your heart is saying, yes, my dear friend, why I should not accept the engagement? It hardly matters to me that directors has been booked by ED or they will be sent to jail. The thing which matters for me is 50 lakh rupees fees. But no, as a 210, read with code of ethics, evaluate the integrity of the management, and if you find any kind of such thing, list out it, document it, and do not accept such engagement. Because as per SA 580, many documents, representation letters will be provided by the management, and there is no integrity in the words of the management. How we can rely on those particular documents? Then identify special circumstances. What should be the special circumstances? I was appointed as an auditor of XYZ Limited. Directors are good. There is no charge against them made by ED. I was their auditor. In the midterm, I resigned suddenly, and Nitin Kataria sir was appointed as an auditor. So when client approaches Nitin Kataria sir, we would like to appoint you as an auditor, he will immediately identify this special circumstance why Mr. Dheeraj Sharma has resigned from this engagement. He will call me, or I am his friend, so he can call me. Otherwise, he will write me a letter that is called etiquette letter. He will write a letter that the client has approached us to be appointed as their state auditor, and is there any reason that why we should not accept this engagement? If you have any kind of reservations, kindly do let us know. Sir, writing a letter and obtaining the confirmation from the previous auditor, that is also part of this step. Document it. You have sent the letter to the previous auditor. Document it in your audit file. Otherwise, you will get the love letter from ICAI's DC. Then assess the competence to perform the audit. Then assessing the competence of your engagement team. Already discussed. Evaluate the independence. Yes, in my engagement team, there should not be any person who is having their interest in XYZ Limited. Then determine the ability to use the due care. Yes. Sir, in code of ethics, a maximum number of DC cases were filed against chartered accountants are more or less related to negligence. their poor performance, and it really hurt. When I realize about this, when I analyze it, I found that no chartered accountant is doing such intentional mistake. Then what are the reasons? Because of that, it is mentioned that your audit quality is very much poor. You have not performed your duties with professional skepticism. These are not up to the expectation level because of some limiting factors. The first limiting factor is time. Let's suppose the 15th of Jan is the due date for tax audit, and on 14th of January early morning, one client is approaching you offering 10 lakh rupees for the tax audit. Now you are very much happy. I should not deny this client. I should accept it. But you are only 2 days and still more than 20 files are left in your hand, which are your existing clients. So in that case, you will do the compromise in terms of documentation, in terms of evidence. And such compromise will arrange a love letter for you. So because of timing factor as well, so sometimes it is the fees factor, sometimes it is the intimidation threat as well. And then thereafter prepare an engagement letter. So this procedure is to be documented. This is all about the controls. Regarding the controls also you have to document. I'm not going to discuss in detail because Paul sir has discussed everything in very beautiful manner. But specifically you have to document about the control environment. You have to take the understanding of that. Risk assessment procedure is to be identified and to be documented. It can be in the form of RCM or it can be in the form of other document as well. Then the control activities in relation to their risk, it is to be documented. The information system relevant for financial reporting. This is not fixed assets register. Financial reporting, that is to be understood and to be documented, that what we have, what kind of activities, the procedure we have performed to get our comfort on the system generated reports and the documents generated by the system. Then monitoring of the controls. So all these things we have to document. Now documentation under various essays. Yes sir, you can read out, you can find out. Already as per essay 200 we have discussed some basic principles about the auditing. In the third or fourth slide we have discussed about the entire procedure of auditing. So such documents to be filed in your audit file. Then we have discussed about quality control. Yes, quality control can only be ensured with the help of your audit file. Essay 240 regarding fraud. Regarding fraud also we have discussed, if you find any kind of such risk, then everything which you have tested is to be documented as per Essay 240. 250 consideration of other law, like compliance of labor law, factories act and all other laws, that is also to be documented in your audit file. Communication with those charged with governance, that means your communication with the management, that is to be documented. Responsibility of the joint auditor, that is to be documented. Then planning and audit of financial statements, your audit plan, it is to be documented. We have emphasized on this thing in our presentation as well. Then as a 350 identifying the risk and all these things. 320 the performance materiality, that is also to be documented in your audit file. Then other essays regarding what we have to document. As a 320, in essay 300 audit planning has been done. Then 315 risk has been assessed. 320 planning performance materiality has been identified. But in 330, what was the response of the auditor toward the assessed risk as per Essay 315? So that is to be documented in as per Essay 330 also. Essay 505 external confirmation. The letter sent by you, copy should be in your file, and letter received from the client, from the vendors and other parties, copy should be in your file. The key of the postal tickets, the receipt of the speed post and courier, it should also be in your audit file in terms of external confirmation when these are crucial. Then regarding 540 accounting estimates, how we have estimated this thing, how you can say that this particular asset's life is 8 years or 5 years, or how you can have the estimation about a realizable value of the inventory. For all these things, as per as a 540, as a 550 related party, and AS18 and as a 550 about the related party, documentation should be there, not only in terms of their financial transactions, but also in terms of their relationship, in terms of their understandings, their agreements, their effects as well. Then written representation obtained from the management, SA 580 MRL, management representation letter. It should be documented in my file. 600 series using the work of another auditor, and 610 using the work of internal auditor. These are other essays under which we people are obtaining. This is your audit file. Last 2 slides. Permanent audit file. Okay, in last 2 slides, I didn't mention SA 500 and 501 because they are already integral part of SA 230 when we talk about documentation. Every evidence, these are related to all these essays. So SA 230, 500 and 501 are the master essay when we talk about audit documentation. And all other these essays we have discussed that in relation to these essays also, documentation should be there. Otherwise, it will be considered as non-compliance. In the permanent audit file, the information about your initial audit engagement, correspondence with your previous auditor, your appointment letter, and all these things. The organization chart, their understanding, and taking the understanding of the nature and business, everything, the history and background of the client, what exactly client is doing, what things have affected in the current year to the business of the client. All these things are to be documented in your permanent file. Contracts, measure agreements, minutes, these should be over there. Policies, systems, flow chart, and all these things, all these should be there. In the current file, your current year's engagement letter, your audit plan, it should be there, what you have planned. Working papers relating to the grouping, testing, control testing, analytical testing, substantive testing, control analysis, and their explanation, your queries, your sampling, everything about these should be documented in your current audit file. Then the confirmations obtained by yourself should be in your current audit file. Correspondence with other auditors and experts, it should be in your current audit file. And management representation letter should be in your current audit file. So this is what all about the audit documentation. Though in a very speedy manner, I try to cover many more things. My speed was a little bit high, and it was geared. And when I was looking at Govindji on screen, his smiling face, he has witnessed my speed.
No, sir, it's perfect, sir. It's perfect.
So thank you. And now before handing over to Govindji for question and answers, one request, one humble submission, and like Nishant sir has mentioned that I usually quote about Bhagavad Gita as well. So today also with one verse of Srimad Bhagavad Gita, I would like to sum up this entire presentation. This verse has been taken from chapter number 11 and verse number is 55. मत कर्म कृन मत परमो मत भक्त संग वर्जित है निर्वैरः सर्वभूतेषु जैसे मामेति पांडव. The meaning thereby, the person who is engaged in his duties with purity, the person who is free from contamination of all the previous deeds, the person who is independent and unbiased, he or she surely reaches the divinity. This is the actual expectation the government, regulatory authorities, and our mother body ICAI and society is expecting from we chartered accountants. So whenever somebody says that people are expecting from us that we people are like God, don't feel irritated, just feel proud that yes, of course, people are having high expectations from our side. At least I should try to fulfill their expectation as per best possible manner. Thank you. Thanks a lot. Over to you, Govindji. I am stopping the presentation. Over to you, Govindji.
Thank you. Thank you very much, sir. Thank you very much. So, sir, can you elaborate on the documentation requirements of a bank branch audit, sir?
That is all about the bank branch audit, sir. If you are SB of a bank branch audit, obviously whatsoever, when we have discussed with the help of all other assays, whatsoever you have tested, how you have obtained, the way of obtaining the sampling, everything is to be documented. There is no rocket science about bank branch audit documentation. Everything which has been obtained by yourself, it should be in your file. Second thing, when we talk about bank branch audit, though I have not done bank branch audit in my entire journey, but yes, of course, there are some format about the memorandum of changes, MOC as well, if I'm not wrong. The format about LFR is also long form audit report as well. So in that also LFR as well, you are mentioning, you are putting the information what you have audited, and you are providing the answer of some questions, and the basis of those answers, whatsoever you have tested, whatsoever you have obtained, everything is to be documented in your audit file. One thing, it can be in the form of hard file, physical form. It can be electronic form as well. You can keep in electronic form also.
Okay, sir. The next query is, sir, can you please suggest or provide an adequate audit documentation in respect of inventory, especially regarding slow-moving, non-moving, obsolete, or damaged categories?
Sir, a checklist can be prepared. Obviously, this is a good thing for me too as well. Though as such, no checklist has been prepared as on date available with me. It can be available on the Google also. But one thing which should be kept in our mind when we people are preparing such checklist to ensure the documentation of slow-moving or non-moving inventory. The definition of slow-moving inventory or the non-moving inventory can be different for the same product for the different clients, different entities. For me, it can be the regular product, regular inventory item, consumable item. The same thing can be the slow-moving item for other entity or the non-moving item for the other entity as well. While taking care of documentation regarding slow moving and non moving entity, though checklist is the different part, but one more thing you have to keep in your mind, that is all about the people get confused about consumables. Though the consumables are kept as the loose tools and some people consider as the inventory also. Dear friend, if you are dealing in those consumables in your trading, then these are part of your inventory. If you are not dealing in the sale purchase of those consumables, these are just for the use of repair and maintenance of your FA, then these are your consumables. Don't get bothered, don't get confused about calculation of their non-moving or slow movingness of these consumables. Because I remember one case study, I was doing audit of one of the largest sugar refinery company in India. And we people were doing audit of their plant, which is almost near to the Nepal border. Almost 10 years ago this incident happened. I was also over there. So one thing which came in my mind, even it was my mistake, so I am sharing this incident with you. I found a list out of the loose tools, and then I thought that these particular consumable items having the worth of approximately 2 crore rupees and their usefulness, these consumables have not been used for last 6 months. Some items have not been used for last 1 year. Their usefulness is really very much limited. Though their shelf-life, or we can say the ultimate use since the date of their purchase is within 3 years, but still they are used even after 6 months, at 8 months, or even after 1 year. So I raised this concern before the planted, and I told that we have to reascertain about the realizable value of these consumables, because these are non-moving items or these are slow-moving items. So I would like to perform the procedure to recalculate the realizable value of these items. Then later on, that experienced person removed my myth, my doubt that, dear friend, this is not part of your inventory. So don't get confused about consumables. You have to do the working for non-movable and slow-moving items for inventory only. This has not to be done for the consumable item. Of course, if there are some items which are lying in your books for more than 3, 4, 5 years, and there is no such expectation of their future use, then only you can write of them. But otherwise, we should not bother about it. For checklist, yes, I will try to prepare and I will try to share. Yes, Govind sir.
Okay, sir. So there are many queries regarding the same point. That is documentation required to be in readable format only? Can't we use video files or audio files to record the queries or the preliminary meetings with the clients? Can it be used as an audit evidence?
Sir, when we talk about audit meetings, when we talk about board meetings, obviously the video recordings are available over there, and these can be considered as the evidence. But of course, that should be in the proper manner. Let's suppose if I have conducted physical verification of inventory as on 31st of the March. And I have recorded the video that I have conducted the physical verification. This video is in my file. And later on, when somebody asked me, Mr. Dheeraj, there was a significant deviation in physical inventory and inventory as per books. How you have performed your auditing? And I am showing him that particular video. No, my dear friend, I have performed the physical verification as on 31st of the March. This video is the proof of that. Ultimately, the proof of procedure is not required. The proof of ultimate outcome, ultimate evidence is required. So please try, if your such evidence is providing the ultimate outcome, in a summarized manner, in a more reliable manner, and nothing is tampered with that, then it can be accepted. And such cases maybe 2 or 3% only, like especially in case of board meeting, in case of some other particular procedure as well. But ultimately, it should be in the readable format. Ultimately, it should be in the readable format. No such restriction on video format, but still, please go ahead with the readable format, because in the audio video mode, we can document the procedure, but it's really very much difficult to document the evidence. Now, you can give me one example of that. Sir, the person has spoken information about a voucher, and the video has been prepared. No, my dear friend, the copy of voucher is to be there in your audit file. Audit file, you cannot say that yes, I have tested this thing and voucher number this, date this, and PO number this. Everything has been recorded in the oral mode. No, proper documentation should be there.
Thank you very much, sir. And ICAI guidance note, sir, does not differentiate in respect of documentation for different type of audits. For example, external audit, internal audit. Sir,
there is a Ramban. Only one thing that is to be understood by all of us. The documentation should be there to define that whatever procedure you have performed in your assurance engagement has been recorded. Whatever documents obtained by yourself, evidences obtained by yourself, based on that you can say that you have obtained the sufficient reasonable assurance. That should be documented. Whatever the communication has been made with the other parties, with management, and with other experts, it should be documented. And whatsoever you have provided in the form of report, it should be documented. Nothing else. The same for internal audit, same for forensic audit, same for state audit. So we should not worry about a different checklist, different documentation guidelines. Only four things. Procedure should be there, document evidence should be there, all the communication should be there, and report should be there. If you have documented everything, nothing else is left.
Okay, so basically, sir, these were the main queries. So I'm sure and I hope that all the queries have been clear. And now, sir, I want to invite the Secretary of Gurugram branch of NIRC, CA Nishant Kumarji, for vote of thanks.
Just a minute, moderator. Can I just add to what Mr. Dheeraj just told us?
Yes, sir.
On the obsolete slow moving, we have got some new rules from the government regarding maintenance of spares for vehicles which are discontinued for 15 years. So any fully knocked down or partially knocked down car or whatever SUV which they bring, the company has to carry the spares for 15 years or the stockists have to do it. It will be very slow, but they're slow moving, but cannot be scrapped till the 15-year threshold is over. The other is we also have the stock which is held, like Mr. Dheeraj is saying about consumables. Certain consumables you may have to import only in bulk, and you'll have a lot of leftovers, like for instance, thread is bought in kilos but issued in meters, and there'll be all these ends like fabric they sell by weight. But other things which are useful for somebody else, but like newsprint rolls in a newspaper company, those cut pieces, though they are usable, become scrap for the newspaper company or the garment company. So scrap, I think we need to work, and also there are a lot of concession agreements on scrapping of public-private partnership assets and so on. That is one. The other is on that WhatsApp evidence and photography. The Supreme Court has ruled under Section 65 of the Indian Evidence Act, it's not allowable as evidence in a court case unless the originator of that information is willing to come to court and testify. You can just check Section 65 of the Indian Evidence Act, not the IT Act. A lot of rules are changing, so I guess we need to look at them very specifically. But thank you, Dheeraj, for a very enlightening session, putting so much stuff into this. short period. Thank you.
Thank you very much, sir, for adding. Nishant Kumar, sir.
Thank you, Govindji. I think Nishant has left due to some urgency. So
Okay,
I'll do the vote of thanks in his absence. So
Yes, sir.
once again, thanks a lot for everyone who has joined, and thanks a lot for our senior member Paul sir, and our ever energetic member and past chairman of the Gurugram branch, Dheeraj Sharma ji. And really, it was a very insightful session, Dheeraj bhai. And as usual, you have ample energy to keep all the audiences very in an interactive mode, and you have answered all the queries related to the audit documentation very well. And I hope that all those people who have joined today's session would have learned a lot from this session. And clearly, it was clear from the deliberation that it was full of very informative matters. And previously Paul sir has also explained the matter very clearly. So I think we are already 10 minutes past the closing time of the session, so we'll not take much more time. Thank you once again. Thank you all the audiences, and thank you our faculties of the day. Thanks a lot.
Thank you, sir.
Over to you,
Thank you,
Govind.
sir. Thank you. Thank you very much, sir.